Hello? Damn. It's a loud one. Good morning, everybody. How's that sound on your end? Does it sound okay? It's a loud one.
I walk on down to the grocery store. Buy just the things that I like. Make it back home when I'm
Damn well good and ready.
Stay out and drink till I'm done. Nighttime drives me crazy. I bang my fist on the wall. Used to call me baby, and now she don't call at all. My
Brother
brother
Bill,
came on
yesterday.
played Donkey Kong all the day long. If you were here, Lord, that never would have happened. I should be happy, girl, that you're gone. Nighttime drives me crazy. I bang my fist on the wall. Used to call me baby, and
Now you call it on.
nighttime drives me
Me crazy, I bang my fist on the wall. Used to drive me crazy, and now you don't call it all.
Nighttime drives me
Me crazy, I bang my fist on the wall.
used to call me
Baby, and now you don't call it all. Split lip Rayfield.
An official message from Medicare. Turning 65 comes with questions. Like, how do I enroll in Medicare? What if I'm still working? Where do I start? Get your questions answered at Medicare.gov, paid for by the U.S. Department of Health and Human Services.
The scale. And I think what analysts have missed here is a major milestone that Disney has hit. And that
Bullshit.
is that the streaming business now, after 4 years, in terms of revenue, is equal in size to the linear business. Its run rate about 25 billion in revenues. That's about 70% of what Netflix revenues are. That's a real milestone. None of the other
it's not.
companies can say it has scaled its streaming business.
Who is this guy?
To the size of its
Don't listen to him.
business. Now, to your point, the linear decline continues, and 22%
Exactly, because they went woke, you idiot.
decline. When you look at the international business, 44% operating income decline on the linear side, with on average linear viewing declining 10% a year. They got to continue to grow that thing, and the operating
They're
margins
not.
are a big
They're not going
question
to.
because at
Who
equivalent
is this
levels
guy?
of revenue to Netflix, Disney is nowhere near Netflix operating margins. But they have scaled the business in 4 years to a 25 billion run rate business. That is a real achievement.
Cutting costs doesn't make you a good company. It's character. Who's gonna, you guys have been pumping Disney, and a lot of people got hurt because of it. It's a piece of crap. I'll still buy it though when it's cheaper.
I don't think analysts have adequately pointed to the real issue for
Woke.
parks going forward, which is Comcast, CNBC's parent company, soon to open the Epic Park in Orlando, which is surely going to create some meaningful competition there for Disney World. It's also going to bring a lot more visitors to Orlando. But Disney dominates the theme park business with the 60 billion infusion of CapEx that they planned for that. It's going to continue to
Where are they going to come with the money?
The issue for Disney, the problem child that I'm looking at is Hulu. It not only has the Comcast negotiation on the buyout to deal with, which is probably not going to end up pretty for Disney. Its sub numbers seem to have stalled. Its daily usage is down more than any other streaming service. And unexplainably to me, its ad revenue once again declined for the quarter. You have Disney CFO saying, hey, the ad market is strong.
See, would you
And
stop
we know
pumping the...
that budgets are increasingly being...
It's all about the ads, you dingbat.
Streaming services, and Hulu is the granddaddy of advertising streaming services, has much bigger ad subscribers than any other streaming service because it's been at it much longer in terms of advertising. And its advertising is declining. I just don't understand it. So
I do, because they went woke.
Area that they're going to have to focus on.
Wow. Yeah,
He doesn't understand. He doesn't. None of these people on CNBC understand, except Joe. This guy that's talking right now. He understands. It's all right. Let the stupidity begin. I'll just short it again. Man, this spy looks very tempting here. I gotta head out. I'll be back. There's a lot of, I'm gonna look for a pivot point, maybe the neckline. Yeah. There's a better picture of it right there. So that ain't gonna work. Damn, they're good and ready. La 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 la. Am I looking at what's the deal with spy here? Oh. What is this number? 51680. Okay. Support channel would be a triple bottom. Resistance to break channel. Resistance to braille. Resistance to break, you beers. Damn calcul. Ooh, right to the. There it is, man. That's it. Fudge. I wish it was 8:30 right now, man. I'd be buying this sucker. I'm telling you, that was nice.
Because the base is so small.
We got rid of that
What do you
nut
have
case.
to see to continue to make you believe that this company is on the right track?
You're right. It's a fair point. Their revenue base is closer to $1 billion. Some of the other mid-cap peers are a few billions or even hundreds of billions if you look at Google. But, I think the tech investor math, for a company like this is how quickly can it double the revenue base? And if you're growing 30%, you can double the revenue base in really just a few years. And so if they can keep this up, they can go from, what was really a subscale ad platform to one of the, more well-defined and more well-scaled assets in the space. Alongside that, the amount at which the profitability is starting to flow through is really good. For every dollar of revenue, about 75 cents of that through to EBITDA on the growth basis. And if you start playing that through, then you can see how this can be, a strong double-digit 20-30% EBITDA margin type of business. And I think that's unique. In addition,
Just real quickly, the question on this company when it was going public was, look, it's a really rich user base. There's a lot of data there. Every company probably has customers that are talking about it with Reddit chains. The problem has been trying to figure out how to monetize that while you still have so many of the moderators who are not paid. They don't work for the company. Is that, what's the dynamic you get from there? Is this going smoothly with that group of volunteers?
Yeah.
You're right. So they are unique, right? In that it is a platform of a lot of communities. You have to maintain harmony among the moderators and users, right? That's a big task. I think they've done it really well. They let some of the power users participate in the IPO the same way institutional investors would, and it gave them a nice profit, and certainly that's higher even today. But on the data side, I think that's really one of the most interesting elements of the story. We've written a lot about this AI cost inflation idea. Pretty much every company is raising CapEx. Why are they doing that? They're trying to train their models. And what do you need to train your models? Unique data, not encyclopedias, but real human conversation. And Reddit is starting to monetize that data asset. They have this deal with Google, and I think there could be others.
Josh, thank you. Josh Bath.
All right, coming up next, Uber CEO Derek Khosrowshahi is going to join us. That stock falling after the current quarter forecast for gross bookings fell short of estimates. We'll also talk ride-sharing competition and much more. And then later, Rivian sticking with its full-year forecast despite a wider than expected loss. We're going to speak to founder and CEO RJ Scaringe about the guidance in the EV market in general. Squawk Box will be right back.
Welcome back to Squawk Box. Uber out with its results this morning. The company reporting a first quarter loss of 32 cents per share. Revenue coming in at $10.13 billion versus $10.11 billion expected. Overall bookings just shy of estimates, $37.65 billion versus $37.93 billion. Joining us right now is Dara Khosrowshahi, Uber's CEO. Dara, we appreciate you joining us this morning. Want to talk about the report. I think it surprised some. You're looking at the stock down just a bit on the back of the news, I think in large part because you had been hitting, you'd become profitable last year, and then here we have this loss this year.
Yeah, I think when you look overall at the results, they continue to be consistently strong, right? If you look at our top line growth, gross bookings growth up 21% on a year-on-year basis, incredibly strong. And if you look at the midpoint of our guidance for next quarter, we're between 20 and 21%. EBITDA growth up over 80% on a year-on-year basis, and then 1.4 billion of free cash flow during the quarter, over 4 billion of free cash flow next quarter. Now, the reason why we moved into a loss, the biggest reason why we moved into a loss was that we've got significant equity stakes in certain companies like Didi and other companies out there. And we had to take a markdown of over $700 million for those equity stakes. It has nothing to do with the operating business, but we did have to mark down those equity stakes that resulted in a loss. We don't expect that to keep happening going forward, but you can't, as you know, Andrew, predict the markets.
So when you, to the extent that investors should look through those equity stake write-downs, if you will, and look at the operations. When you think about the operations over the next 12 months, how is it looking to you? Because we've had now a number of CEOs come on over the past quarter, this whole earnings season, and say, you know what, it feels like things may either are soft now or going to get softer in terms of what their expectations look like.
Yeah, we keep looking for signs of softness just because we read all the news that you read and talk to the folks that you do as well. But we're not seeing signs of softness. If you look at our guidance, it's between 20 and 21% for next quarter. That's super strong. When we look at consumers, are they trading down, for example, on Uber Eats? Are they eating at less expensive restaurants? We see no evidence of that. Frequency is up. Our both retention is up in mobility and delivery as well. So we're not seeing the kinds of signs of weakness that other folks are talking about. Hopefully that'll continue. One interesting trend that we're seeing is that people are getting back to work. Actually, if you look at workplace and you look at commute and office, people are absolutely getting back to work. Our workplace hours are stronger than, let's say, leisure hours. And also travel continues to be strong as well. Travel grew at very significant rates on a year-on-year basis.
Speak to the issue of pricing on the mobility side. This is getting picked up in a car. Given that, in truth, it appears that Lyft, your biggest competitor, has gotten more competitive, or at least tried to get more competitive on price. Has that forced you to bring prices down in certain markets?
We see pricing in the U.S. as being stable. So you saw our mobility business, for example, grow 26% on a year-on-year basis globally. So the growth rates that we're seeing are very significant. And overall, the majority of our growth is coming from audience growth, for example. Our audience increased 15% on a year-on-year basis, and frequency as well. People coming to Uber more, especially as a higher percentage of our consumers become members of the Uber One program. Frequency is up 6%. Gross bookings for us grew 21% year-on-year. Trip growth was 21%. So we're not using price to drive growth, which might be different than some of the other companies out there.
Speak to the Uber Eats piece of this. That's always been the piece that you continue to invest in. And the question is that part, how quickly is that part of the business going to be profitable?
Well, that part of the business is profitable, happily. So our growth rate was consistent this quarter, 17% on a year-on-year basis. Most of the growth is coming from audience and frequency. Retention rates are up as we continue to add selection. We've got over 1 million members now, 1 million merchants now on the platform. So we're seeing eaters come back to us more frequently, more predictably as it becomes kind of a habit, so to speak. And we believe we've gained category position in 10 of our 10 biggest markets on a global basis. So Eats continues to grow and at the same time is profitable. So adjusted EBITDA for Uber Eats business was at a record margin, 3% of gross bookings, up over 80% on a year-on-year basis. So we're now at a point as a company where we can continue to grow at outsized rates compared to our scale while continuing to increase profits and increase profit margins.
Yesterday, you announced a deal with Instacart where folks who are using the Instacart app effectively can use your service. How much is that going to be a game changer or not in terms of what it means over the next 12 months to the business?
Well, we're very excited about the Instacart partnership. We view it as being highly strategic. When you look at our penetration, especially Uber Eats penetration, and you look at our category position, we are super strong in the big cities. And you'd expect that, right? The Uber name is it's kind of an urban kind of a brand. And we believe our most significant growth opportunity in the US is in the suburbs, is in the less dense areas. That's an area of strength for Instacart. They wanted our content because they know we've got the best selection, the best service, the best pricing out there. And so we now get to put the Uber Eats brand and service in front of, the over 10 million Instacart customers who tend to live in the suburbs, tend to be highly affluent, kind of shop with big basket sizes. So we're very, very pleased with the partnership and the potential that we see going forward.
How much of that was about trying to box out DoorDash?
Well, we compete with DoorDash every day. So I wouldn't say it's necessarily trying to box out DoorDash, but they're a strong competitor. We think we're a stronger competitor. And we think that having access now to the Instacart customer, that tends to be, there's a lot of overlap between the Instacart and the DoorDash customer. We think that's a strong strategic move. The deal is going to be profitable for us. So we kind of have the best of both worlds in terms of top line growth and profitability. That's highly strategic.
When you think about your competitors today, who are they actually?
Our biggest competitor, Andrew, is the personal car ownership, right? It's that car in the garage or that second car in the garage. And if you look at everything that we're doing, we're trying to build out more and more services for you to leave that car alone, whether that's reserve, so you can get to the airport, or whether that's renting a car on Uber or coming to Uber Eats for your dinner or your groceries as well. The biggest competition is car ownership.
Right.
It's a tough competitor, but we continue to make progress against personal car ownership.
Has there been any shift in your mind about robotaxis? There was a period of time we used to talk about robotaxis probably every quarter. The state of robotaxis, where are they? And then we effectively stopped. You stopped that investment as well. Now we're starting to hear, and Elon Musk has sort of been in the background on this, but now he's very vocal about turning Tesla into a robotaxi company, and we're starting to see more technology that seems to actually be working. Do you have a different sort of view about this now?
Well, we think that the autonomous technology brings incredible promise in terms of improving safety, lowering prices, making mobility available for everybody, which we think can increase the overall market share of our services. And listen, I would never underestimate Elon Musk and Tesla. We're big fans of his. They're clearly the leaders in EVs, and we have a lot of Teslas in our marketplace. At the same time, I wouldn't underestimate what we bring to the table in terms of the Uber brand. We're Verb in terms of our matching, pricing, routing technology, our payments, fraud, identity, safety technologies as well. And so as a result, we think we're in a great position to work with any and all AV manufacturers as the technology develops safely, including Tesla, by the way, because what we can bring with this network is higher utilization of AV assets, and we think that's
do you see a sea change? I mean, there are people in the tech world who think that the new Tesla FSD, which is the full self-driving, which is now running off of AI, it's really the major shift in this, that there was a step change in what it's capable of doing, and that we now might be actually dramatically closer than we were a year or 2 or 3 ago.
I think the early promise that we see with newer AI models and imitation learnings, what we call internally AV 2.0, is very exciting. Now, remember, AV had very strong early promise as well. So early promise hopefully will result in faster development, and we'll see how that develops. And again, because of the demand that we bring, we can drive enormous demand to this promising technology. If it develops, we think it'll be a huge positive. It also allows a lot of smaller players to develop this technology, just like you saw kind of in the early days, LLMs, they're all a bunch of big players, et cetera. You saw kind of open source, smaller models come in. We think the same could be true of the imitation learning models that we're seeing in the market. So it's pretty promising. We'll see how it turns out. We're going to be a player in the space.
Looking at Uber without any Uber drivers, it's just all robo-taxis?
I don't think it's going to be all robotaxi anytime soon, and we think that when the technology comes in, there will be a transition, and you will have essentially hybrid networks. Sometimes a robotaxi may be the right answer for you. Sometimes a person may be the right answer for you. And going through that transition, we think we're uniquely situated as a marketplace to essentially have any and all safe AV tech along with human drivers on our network. We will be the most dependable network, will be available everywhere, and we think we can kind of steer through this transition and really thrive through this transition.
Dara, I appreciate you joining us this morning, and look forward to seeing you very, very soon. Hopefully we'll do it in person next time. Thank you.
Thank you.
Appreciate it. Coming up in the next hour, we should mention that Lyft CEO, David Risher, is going to be with us, and we'll talk to him.
It's a really weird transition. You think about a company that has done so well because it didn't have CapEx that it had to put into it, but it does have the issue of labor and some of the struggles that come with that. For them to do this, it would be a cap-heavy.
No, they would not do it that way.
They wouldn't. They would just do it around the edges.
They
would be
they would be the network, and then other
somebody else
people would
be
have a
putting the
car, and
CapEx
you'd
in.
put the car into the system. I mean, I don't want to speak for them, but that's conceptually how it's been described in the past.
That makes much more sense, because otherwise it's too heavy of a lift.
Yep.
Yeah.
All right,
So to speak.
Yeah, right. Lift. Still to come, one of the most powerful women in media and entertainment, Bonnie Hammer, joins us to discuss her new book, which aims to empower women in the workplace. And then in the next hour, Rivian founder and CEO RJ Scaringe, and then Harvard professor and podcaster Arthur Brooks joins us to talk college campus unrest. He's all about happiness, and he needs to ramp it up a little. Every time he comes on, things are worse. Squawk Box will be right back.
Time now for today's Aflac trivia question. What PC vendor has been the global market share leader since 2013? The answer when Squawk Box returns. Now the answer to today's Aflac trivia question. What PC vendor has been the global market share leader since 2013? The answer, Lenovo. As of last year, Lenovo held about 25% of market share.
Humanly possible.
Shares of Shopify plunging in the pre-market. The online retail platform reporting first quarter earnings and revenue that beat estimates. Shopify said that it sees second quarter revenue in the high teens compared to the analysts' consensus of 19.6%. Current quarter margins are expected to decrease by about 50 basis points compared to the first quarter as a result of the sale of its logistics business. And you can see that stock kind of taking it all in, down by more than 16% this morning.
Okay.
Yeah.
Separately, a special committee at TripAdvisor said it's determined that there's currently no transaction with a third party that's in the best interest of the company. The board has authorized the committee to engage in discussions about a potential transaction. That happened back in February. The online travel company also just reported earnings. EPS beating estimates and revenue were in line with expectations, but the stock down on the back of that at 16, down about 16% on the back of that news.
Chinese state news outlet China Daily says China would welcome Tesla's robotaxis. The idea was floated by Elon Musk during his visit there in April. Eunice Yoon joins us now with more. Hey, Eunice.
Hey, Joe. Well, the state-backed newspaper cited sources as saying that Chinese officials told Musk on his whirlwind trip that China, quote, welcomes Tesla to do some robo-taxi tests in the country and hopes that it will set a good example. Now, Tesla wouldn't comment on this report, but the move could potentially be very good for Tesla because it'd be able to experiment with its robo-taxi technology in an environment that is a regulatory environment that's much more conducive than the U.S. Elon Musk has said that he hopes to unveil the robo-taxi on August 8th. For the Chinese, they want to be leaders in AI, autonomous driving, as well as other advanced technologies. So having Tesla here testing out the robo-taxi backs the national agenda. Now, what was also interesting is that the state paper had also flagged that Tesla still did not have a full approval for a broader rollout of its FSD, or full self-driving driver assistance technology for its other cars. They said that there needed to be approvals for data collection and data transfer. The paper also played down the announcement of a deal with Baidu, saying that it's more for the accuracy of the maps rather than for FSD. So not clear why the Chinese wouldn't approve this or discuss it in this way. However, the Chinese government has approved similar driver assistance technologies for Tesla's rivals here in China.
Well, live long enough. I guess, earlier I heard that Airbus is doing much better than Boeing because of all the capitalists over in France, and now I hear that China has a much less stringent regulatory structure than we have here. So in communist, as I say, what's in it for China? I don't really understand why they'd be so altruistic.
Well, the Chinese, why they would want to do it, but the Chinese really, really want to be leaders in these technologies. So in terms of the regulations, the belief is that the government is more willing to maybe turn a blind eye on certain things or to allow certain things to happen in order to achieve what they see as a bigger goal, which is becoming the technology leader.
So the first robo-taxi goes straight somewhere where they just start taking it apart. Okay, this is how you do this, is how you do this. Is that the idea? Don't say anything.
Let's hope not.
Do not answer. Thank you, Eunice. See you later.
Coming up, Bonnie Hammer, Vice Chair of NBC Universal, joining us to share her new book, 15 Lies Women Are Told at Work. You don't want to miss this. Squawk Box coming right back in just a moment.
right, welcome back, everybody. Our next guest has been hailed as the queen of cable TV. She also has some essential career advice for women, particularly those who are just entering the workforce this graduation season. And she turned some conventional workplace advice on its head. Want to welcome NBC Universal Vice Chair Bonnie Hammer. She's got a new book out this week. It's 15 Lies Women Are Told at Work and the Truth We Need to Succeed. And Bonnie, thank you so much for being here.
Pleasure. I'm delighted to be here.
Great to see you. And we think this is for men too.
Yeah, we do.
Just want to say.
We're just talking about. And I will say, I don't like advice books. I don't like self-help books, but this is different. And when I read this book, it's like listening to you talk, and you are a straight shooter, and you cut right to the chase on things, and you make fun of some of the silly things that are kind of. These little sayings and platitudes that go out that we're supposed to listen to as life rules. And that's, I think, what it grabbed me the most. Things like lean in, know your worth, fake it till you make it, you can have it all. You turn all of those things on their head.
Well, they're dangerous cliches, and they make for a dangerous manual for growing up in a work world. And I think if we believe these sound bites, it's like a misinformation campaign against everyone, in particular women. So I also agree with too many advice books, but there are not enough books out there that expose bad advice.
Agree.
And that's what I'm trying to do here.
Agree. And again, I think the reason that this really grabbed me is because you speak the truth in a way that most kids are never going to hear these things coming in. Not just kids, people later in their careers too. Let's talk about some of the great practical advice you give out. And because it's graduation season, and because I have two daughters myself who are in college and who are coming home and who are out there starting to look around in the workforce. Some of the things you say is the truth is the lie is know your worth. The truth is you have to work on your worth.
Right.
Explain what you mean.
Well, I think we conflate personal worth and professional worth. Everybody has, personal worth. You're born with it, and you deserve to be treated right in life, period, end of conversation. But the only way to prove your worth at work is to work at it. There's a belief that personal worth at work is intrinsic. You have to earn it. I think the kids growing up right now kind of grunt at grunt work. When I started out, my first job literally was cleaning dog poop. And was it beneath me? Absolutely.
I still do that.
I do that at home.
I did it yesterday for 2 German Shepherds and a Corgi. So, and it was like 2 weeks worth.
This
I'm
was
tired.
your job at public.
Yeah, no, I know.
It was literally my first
So
job.
I'm just telling you, I feel you. I feel you.
It was a Nepo hire, and this dog made more than I made, literally and figuratively. But what happened was, you follow the dog around, you pick up its poop, you do it with a smile. People are happy to have you around because you're optimistic and you're seemingly having a good time. And so when the time comes, they want you around, so they're going to bump you up. The reason I got promoted was because I did that stuff with a smile.
And by the way, despite all your connections, your son, Jesse, went to work in the mailroom of one of the big agencies.
Yes.
And he had to do the same thing.
And I didn't help him get anywhere. And he took a job in the mailroom, and he would come back and complain like crazy that, oh my goodness, they're not letting you use my brain. I'm smart, they're not letting me use my brain. And I would say, Jess, excuse me, you took a job in the mailroom. What did you think you'd be doing as opposed to writing scripts at this point or doing other stuff in basketball? That's not happening. But he was wise enough when he went around, delivered the mail, packages, whatever, he networked, he smiled, he made friends with the agents in this space. And it worked for him. And he looks back with his own smile right now and realizes, okay, I get it. And he's doing great now. But you have to work at your worth. You have to make people believe you're going to be around doing anything they ask you to do, whether it's running out for coffee or actually doing some thinking with and for them.
Another one of your lessons is just looking for mentors, and not just mentors who are supportive mentors, but also challenging mentors that while they may be the most difficult to work for, while it may be hard to take constructive criticism or just criticism at points, they are the ones who are going to teach you the most. And one of your one of your mentors, who was one of the more challenging ones, is someone who's a guest of the show, Barry Diller. He's someone we see pretty frequently, too. You want to talk about your experience and what got you to that conclusion that these are good things?
Well, I think we're brought up to believe that mentors should be cheerleaders. They should be just giving you the rah-rah the entire time and being super supportive, being a friend. What I've learned, particularly because of Barry, is the best mentors are foils. They are drill sergeants. They put the tough in tough love. And trust me, Barry is and was very, very tough. But he taught me how to think. One quick story. He was my boss when, in the early days of running Sci-Fi. And we were about to launch a show, or we were trying to get permission to launch a show with a psychic. And Barry's question to me was, if psychics are real, why are you putting them on a science fiction show? If psychics are not real, why the hell are you doing business with them in the first place? We went back and forth, email all weekend long, and this was way before iPhones, so we were sitting in front of computers. Yep. Friday, Sunday, I was about to give up, and I finally came up with, okay, Barry, psychics are in the mind of the beholder. To prove that they are real or not real is impossible. It's not fact, it's not fiction, it's something in between. It's friction. Therefore, it's perfect for the science fiction channel. At 11 o'clock on a Sunday night, he writes back, okay, your arguments win, go. He forced me to think, to analyze, to debate with myself, to come up with something that was logical and right. So even if it failed, it would be okay because I thought it through.
And by the way, this was someone who, until that point, you really struggled with trying to work with him and understand him and get what he was doing. You had your kickbox punching bag. You painted his name on it.
I was petrified. I literally hid under the table for the first probably 18 months of working for him because I was so afraid he was going to ask me a question and I wasn't going to be able to answer.
What was the turning point for you to realize that? The value in it. Because I think sometimes people in the moment don't appreciate the value.
It was winning, getting your argument,
yeah, I think it was mostly in hindsight did I genuinely appreciate who he was, what challenging mentors were about, what sparring partners were about. But I was fiercely determined to make or want Barry to respect me. It was something about being able to survive it and get his blessing that made me want to stick it through. And I also watched a couple of people, one in particular, Stephen Rosenblatt, who used humor to deal with Barry. And I so admired it that I tried to follow and copy that a little bit. But it's in hindsight that you realize how much you learn from those people in your world, as opposed to those who pat you on the back. And I was lucky. I had some great cheerleaders, supportive mentors too. But in hindsight, the Barrys of the world really taught me.
Do you think entry-level positions, and if you're not entitled and you're willing to do it because of the promise of what can come down the road, do you think with all the talk we have now about living wages and everybody's got to make $25 an hour, is that the way we should do it? Should kids expect to walk right in and make $25 an hour, or because we see what might happen? There may be it may be all automated. There may be no entry-level positions left.
Exactly what you're saying. I think it's our generation, in some ways, my generation, who set kids up to believe that they are entitled the minute they walk through a door to better pay, better jobs, better tasks, and we created, A's for effort, participation trophies so they never fail, deferments from college rather than rejections from college. We created a world that the expectation is, of course I'm going to win, of course I'm going to succeed. I don't really have to be better or do anything more than anybody else does because I'm going to get it. I'm going to get that job. I'm going to get promoted.
I can do it on 3 days a week.
Yes, yes. And life doesn't work that way. No. And it's so important for kids to come in and learn and get experience because the world is changing. if you think about in college for so many years, oh, you have to be a programmer, you have to learn how to code, and that's what kids will push to. Guess what? That doesn't exist anymore. AI's going to take that over. So learning practical skills, meeting people in so many different directions, you know, not being afraid to get out of your comfort zone. Ultimately, when you look back, that's the thing that will help you.
So
achieve
everybody
your
should start by
future.
picking up dog poop. What do you think is that?
I'm a big sport of it. I have
Did you,
two dogs.
you remember Seinfeld's joke that the aliens looking down says, you know, the dogs are the rulers down there because they've got people following
Scooping
them
up
around,
them.
scooping.
It's
My
pretty
dogs
true in a lot of houses.
It is true. The dogs are the rule. All right.
The book is full of lots of very
Full of.
practical pieces of advice that are useful and helpful, things that totally resonated with me because I've lived through it in my experience too. Bonnie, I just want to say thank you for coming in today. Again, the new book is out this week. It's called 15 Lies Women Are Told at Work and the Truth We Need to Succeed. By the way, I bought 2 copies already for my daughters, and I'm going to get signatures before you go.
Thank you.
Thank you.
This is
Thank
great.
you. Great to see you. Coming up when we return after this, the Senate taking up a bill now to keep our skies and airports safe. We're going to hear from Senator Jerry Moran about some of the issues at hand when it comes to the FAA reauthorization bill. Don't go anywhere. Squawk Box coming right back after this.
With only 2 days until the deadline, Senate Commerce Committee leadership has agreed to a partial FAA reauthorization package with 9 amendments still on the table, non-aviation related issues. Joining us now, Senator Jerry Moran. He's the lead Republican on the Commerce Aviation Subcommittee. He's also co-sponsor of the FAA reauthorization act, and I guess we all get used to trying to watch how things are done in Washington. It needs to be done, right? Is that your message that comes into there? Need to focus on whatever the distractions are. It needs to be done.
Absolutely, Joe. This is the takeaway that Congress should have with the concerns that have been ongoing with airline safety. We need to provide certainty, and FAA reauthorization helps give the tools to the FAA to do its job well and to do it better. It took us a long time to get a FAA administrator confirmed in the United States Senate. That was a step in the right direction, a significant one, again, in that certainty. And now to make sure that there's a consistent plan going forward. The last time we went through FAA reauthorization, there was extension after extension after extension. When I became the ranking Republican on the Aviation Subcommittee, one of my goals, which seems pretty modest, is could we just get our work done on time? And we've been working on this for 14 months now. Every member of the committee and most members of the United States Senate have had input in this. The House has passed a bill, and it's time to move forward. As you say, this extension that we're operating under, the first extension, and I hope there's not a second, concludes on Friday. And incidentally, because it's a revenue bill that's required, it was an extension would have to originate in the House. That means days, maybe weeks, not just a simple. So I really think an extension is pretty much out of the question. And tomorrow or Friday, you and I can have a conversation. I could be totally wrong, but it seems to me we're going to move forward as we need to.
It's not a done deal, though, is it? What do people want?
It's not a.
Both sides want some things that you know, it's not soup yet.
It's not. I mean, and most of the amendments that will cause difficulties have little or nothing to do with aviation. They're non-germane. They don't fit in the bill. But this is a symptom of a Senate that works pretty slowly and has not had a lot of legislative accomplishments. It's hard to get them around here, and a lot of perception that this may be the last major piece of legislation to work its way through the Senate, certainly before the elections and perhaps before the new year. So everybody, all of us have things we want to accomplish, and so you look for what we call here in the Senate a vehicle to attach this to, so that when that vehicle moves, our amendment is included. And that's what we have going on here. We're determining what amendments are going to be considered, if any, and I would guess that number is pretty minimal, and we'll just kind of march our way through using cloture and the time constraints to get it done. The leverage that someone who wants an amendment has is just to slow the process down, causing us to miss that May 10 date.
But Democrats, they don't like that provision that undercuts the automatic refunds. How's that? I mean, is that a deal breaker, or are Republicans, who needs to give on that?
I mean, I think that issue, what I would say is that what we have reached a conclusion in the committee is what needs to take place. There's bipartisan broad consensus. So, I mean, the give has to be with those who are trying to amend a bill that has had a long history in getting accomplished, but has broad support. I'd say the amendment that stands out to me is the issue of slots at Ronald Reagan National Airport. The bill, the underlying bill, adds 4 slots, four additional five slots, five slots going for landings and takeoffs, round trips a day. The Virginia senators in particular, who have a strong interest in Dulles, are attempting to take that provision out. That would be the amendment that is germane, that has a lot of conversation. Slots are always important as different communities, cities across the country are affected by flights to Reagan National.
All right, Senator, what's today, Wednesday? We'll see. It's not done till it's done, but good to have you on and detail all the nuances for us. Senator, thanks.
Always good to talk to a person who is well-traveled in Kansas, Joe. Thank you.
You remember that, huh? I was just thinking about that. I do. I love it. Hayes and Russell and Bonner Springs and Lawrence. God, I can just reel them off, can't I? I know Kansas well.
You were good, and You can get you to Wichita, the air capital of the world. Aviation is front and center.
Right. It's one place I don't think I've been because it's not on the way to Boulder, from Ohio. Anyway, thank you, Senator. Good to have you. It's
Yes,
8
sir.
a.m. 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan. I'm with Becky Quick and Andrew Ross Sorkin. Among today's top stories, Uber shares are lower after the company posted an unexpected net loss in the first quarter, though revenue is up 15% year over year. The White House says President Biden will travel to Wisconsin today to announce plans from Microsoft to build a $3.3 billion high-tech data facility, or center. The facility was built on the same land. Yep, you might be asking. This is where Taiwan's Foxconn once planned to build a $10 billion factory. In the criminal racketeering trial of Archegos Capital Management head Bill Huang, set to begin today here in Manhattan with jury selection. Prosecutors say the implosion of Huang's family investment office in 2021 caused more than $100 billion in overall shareholder losses.
Intel confirming that the Biden administration has revoked licenses for exports of certain consumer-related items to a customer in China. The Commerce Department said yesterday that it was revoking licenses related to Huawei. Intel says it now sees revenue for the current quarter below the midpoint of the previously forecast range, but it expects to remain within that range. The stock today, though, down by close to 2%.
Meantime, let's take a quick look at futures ahead of the market open. Still about an hour and a half to go. Right now, the Dow would open off about 11 points. You're looking at the NASDAQ down about 43 points. The S&P 500 off just about 10 points. So I'll just show you Treasury yields before I kick it over to Dom Chu. 10-year at 4.488, and you're looking at the 2-year at 4.841. So pretty close. Let's get to Dom, who's looking at this morning's pre-market movers.
All right, good morning, Andrew, Becky, and Joe. We'll get you caught up on some of the late-breaking earnings news, and in anticipation of one coming up, we'll start with shares of Affirm, which are up just about 4.5% right now, pre-market, and around 200,000 shares of trading volume. This is the digital commerce platform, maybe best known for its namesake buy now, pay later installment purchase system. It reported a smaller per-share loss than consensus estimates, better than expected revenues. It also gave a more bullish current quarter revenue forecast than expected, and as a result, you've got shares up just about 4% right now. Then you've got shares of TripAdvisor, which are tanking. They're down by roughly 15.5% or so, around 80,000 shares of volume. Now, it was generally a good earnings report. Profits came in better than estimates. Revenues were in line with expectations. But more than any of that, the company also said that its special committee evaluating the potential for TripAdvisor to be an acquisition target has determined that a transaction is not in the best interest of shareholders at this time. That bit of news is sending those shares lower. You can see that they've rallied quite a bit, but are now sharply lower from those highs. So keep an eye on that. And of course, Becky, we're still on the watch for what's happening with Fox. We'll see those in the next maybe half hour or so. I'll send things back over to you.
Okay, thanks, Don. We'll see you in just a bit. When we come back, professor and podcaster Arthur Brooks joins us to talk about the unrest on campuses across the nation. We'll be right back.
CNBC.
All right, let's talk markets right now. Joining us for that is Emily Rowland. She is co-chief investment strategist at John Hancock Investment Management. Emily, you say that the markets right now are kind of like a moody teenager. Why do you say that? You want to explain?
Sure. So we've been in this period where the economic data for April are actually coming in pretty disappointing. You had a slew of it last week. Consumer confidence at a 2-year low. Both the ISM manufacturing and services PMIs slipping into contraction. Of course, the April jobs report missed expectations by a mile, but risk assets are loving it because we're back in this bad news is good news feedback loop where you're seeing this excitement that maybe expectations that the Fed can cut are being revived. So we're seeing risk assets take off, Bitcoin surging, unprofitable growth at any price type companies are leading. Chinese equities are moving in parabolic fashion. It feels like a little bit of a phase, like a moody teenager would go through. They're kind of erratic, they can be unpredictable, they can be strange, but you know that they end at some point. So we're suggesting maybe you ride the phase out and continue to lean into higher quality companies that are trading at reasonable valuations.
I was going to say, what happens in the next phase? You think the markets come back down, or?
Well, I think there's only so long that the economy can operate at these higher rates, right? So eventually something is likely to crack. We're likely to see the unemployment rate go up and experience an economic contraction. In that type of environment, we would suggest fading riskier assets, still owning equities, but again, those higher quality stocks, they're going to have a better ability to navigate that late cycle environment that eventually unfolds into contraction.
Where do you see those stocks? What sectors are you talking?
Yeah, so we still like technology stocks. If you want quality, so great balance sheets, lots of cash, great return on equity, mega cap tech is going to be your poster child for that. Of course, we know we've got a little bit of a valuation issue with tech. Those stocks are overbought. They are doing the bulk of the heavy lifting from an earnings standpoint, but if you look at something like the S&P 500 growth index, it's trading at a 45% premium to its 20-year average. So we want to balance that with stocks that are actually on sale. So we're looking at things like mid-cap stocks, particularly industrials, that are benefiting from all the fiscal spending that's going on. Stan Druckenmiller did a great job talking about this on your show yesterday. So we want to follow where that deficit spending is going, and it's things like infrastructure projects in the United States. We're seeing a booming environment in the Midwest right now. So we're looking at mid-cap stocks as being the best way to play that, given their overweight to the industrial sector.
Thanks for coming in, Emma.
Thank you.
Breaking news from Tesla shares falling on news of a DOJ probe. We're going to bring you more on that story after the break. Plus, 3 big interviews still to come. We're going to hear from the CEO of EV maker Rivian, AEI President Emeritus Arthur Brooks, and Lyft CEO David Richard on quarterly results. Stay tuned. You're watching Squawk Box on CNBC.
Ben.
Welcome back to Squawk Box. We have some news that is just crossing the Justice Department investigating whether Tesla committed securities or wire fraud by misleading investors and consumers over its vehicle's self-driving capabilities. It's according to a new Reuters report just out, citing 3 people familiar with the probe. Tesla's autopilot and self-driving systems assist with things like steering and lane changes, but are not fully autonomous. And we're watching shares of Tesla falling on the back of that report, about 3.5%. Philip O is with us right here on set. I wanted to get your thoughts on this report.
Not surprising. I look at this report, and we've known that the DOJ was looking into autopilot and full self-driving. And I think it makes all the sense in the world that Washington would come back and say, you have made comments, Elon Musk or Tesla, that essentially give the impression that it's 100% hands-free. Now, the fine print, and we've said this and everybody has said this, they are nowhere close to 100% autonomous vehicle technology. And they will say that in their fine print. But apparently, I think what the DOJ is looking at is saying, sure, it's in the fine print, but did you sell it? Right. Did you tell customers you basically will have autonomous driving?
I think there's 2 questions. How much of this is about what the company and Musk has told investors about the prospect of self-driving and the speed at which it may be available?
Correct.
Versus what was told to customers, which is to say that there's certain Teslas that you can buy with the full self-driving capabilities, and people were buying that and paying up an extra fee in part because of the expectation that it was going to come, right? They didn't say this vehicle has it today.
Correct.
They would say, if you buy it now, you're going to get in, and all we'll have to do is update the software, and then you'll have
but
it.
The counter argument from Tesla is that we have not told people they are buying autonomous vehicles. We have not told people that there is a certain date when it will be autonomous. We have told them that we believe that it will be autonomous at some point in the future. And I think that's where Tesla is going to come down, obviously, in this argument with the DOJ.
How much of this is going to be around internal emails and texts?
Quite a bit, I would
Some
imagine.
engineers saying, you know what, we're still 5 years off. And,
I'm sure.
You know, a comment from Musk saying we're a year off.
I'm
and
sure
then the
that's a big
question is
part
going
of
to be the difference in whether that's a debate.
The puffery clause, where companies basically are allowed to do some of this. I mean, if they outlaw puffery, I have to quit, I think, right? No one can run for president with that, you know, on either side, basically. I mean, puffery is, I mean, it's kind of a fact of life.
Look, we're going to see this over the next 10 to 15 years. And who knows if Elon Musk and Tesla, if he's still running Tesla 10 to 15 years from now. But he is pushing full self-driving as quickly as possible. Ultimately, there is going to have to be a decision about moral choices. I'm not saying this is happening next year, but down the road, at some point, full self-driving, whether it's Tesla or somebody else, autonomous driving, will no doubt lower the number of deaths and accidents anywhere.
But there's still going to be some, and they're going to be
But there will be some, and we will have to make a decision. Are we okay with a computer that hits somebody in an intersection versus you or I, where we say that's human error?
I'd asked Derek Khosrowshahi about this. Are you of the view that the new full self-driving, what they call it, at Tesla, which is now powered by AI in a very different way than some of the machine learning and other programs that were used in the past, is a major step change in how close we are to actually seeing this
I think it is, especially for everybody that I've talked with who has experienced it and used it on a regular basis. Now, having said that, look at Adam Jonas's note. Talk to anybody who uses it on a regular basis. They will all say the same thing. You get close in, where you're driving in neighborhoods or in a city and so forth, you still need to take control of the car. That final 5% is going to take so long to capture and figure out. So when somebody says, well, there's going to be a robo-taxi and it's going to pick me up at my house and it's going to take me here and it's going to drop me off, that's not happening soon.
But you did see it with Cruise, even though the Cruise product ultimately was halted in places like San Francisco.
In a geo-fenced area.
Right.
And maybe that's what we see with robo-taxi, in a geo-fenced area, but not widespread, at least not soon, which is what many people expect.
Okay, Phil, don't go anywhere because we're going to have you back in just a little bit. But after this break, we're going to bring you some highlights from a conversation that I had yesterday with Palantir CEO Alex Karp and the former chairman of the Joint Chief of Staff, General Mark Milley, on a variety of topics, including whether technology will lower the cost of war in the future.
Does it ultimately cost more or less?
Is it going to cost more or less? I actually think it'll cost less. I think you could take the money.
We're going to have a lot more of that on the other side of this break. Stay tuned. You're watching Squawk Box, and this is CNBC. Welcome back to Squawk Box. In Washington, D.C. yesterday at the Ash Carter Exchange on Innovation and National Security, I moderated a panel about geopolitics and the role of artificial intelligence in warfare. I asked the former chairman of the Joint Chief of Staff, General Mark Milley, about the politics of war, given the protests that we're now seeing across college campuses.
Israel has a right to defend itself. They were the one who was attacked brutally on the 7th of October. 1,200 people were slaughtered, not just killed in the conduct of war. They were slaughtered, beheaded, butchered, raped in front of their husbands. It was stuff that was not even a hair's breadth removed from what the Nazis did. And if you take the math and do 1,200 and apply it to the United States, that'd be 50 to 100,000 people dead in a morning. Can you imagine what we would do? I mean, seriously. So Israel has every right to defend itself. War is a horrible thing. I had a lot of years in combat, been shot at, blown up, the whole 9 yards, right? It's a horrible, brutal, vicious thing. And unfortunately, because the character of war is going to be in dense urban areas, that the very conduct of war is going to have very high levels of collateral damage. There's almost no way around it. But if there's any morality at all, you need to get into it, achieve your political objectives, get it done fast, and get it over with.
Just as a side comment, that was probably the most jarring piece of it, because we talked a lot about how lethal war in the future is going to be with artificial intelligence and technology. It's actually, in many ways, going to make it possibly more lethal, and given that the expectation is that more combat is going to happen in cities, in very dense areas, that the kind of war we see in the next 25, 30, 50 years that the kind of damage and potentially collateral damage, you'd think maybe technology could prevent that, but
Civilian
the shifts in that. And so part of what he was talking about was this idea that politically you actually only have a very short amount of time if there's an attack on one end to retaliate, because the moral pressures and political pressures become almost too great to bear. And so from a political standpoint, if you're going to have the political calculus to go out and do something, you have to do it and do it very, very quickly.
We've seen the narratives. I've seen two narratives about how Israel has conducted this war. One is that it was indiscriminate. I watched 60 Minutes. It looked like totally indiscriminate. On the other hand, I've heard that every possible thing that can be done, computer-wise, evacuation-wise, that Israel's gone to great lengths to try and minimize civilian cancer. So which is true? It just depends on what you're reading
And
or
it may
watching.
very well be somewhere in the middle. Also want to show you this because I think it speaks to where we are in society today. Palantir CEO Alex Karp never one to hold back. He has now been calling out corporate America for its silence following Hamas's attack on Israel October 7th. Here's what we had to say yesterday in Washington about the protests across college campuses and potentially hiring from them as well.
Of course, I've been calling out the thin, corrosive, cancerous ideology that regresses below Judaism, Islam, and Christianity, and any form of Western thought that is now a pagan religion infecting our universities, because it's dangerous to America. It is dangerous to allow discrimination on our college campuses simply because the people are being discriminated against are viewed as successful. That is really dangerous, and we have, especially people like me who view themselves as progressive, need to stand up. It's divided. I've had people, mostly in the corporate case, people are like, "Are you sure you should say that?" And are like, supportive. I would say in my intellectual circles, there are a lot of people, especially on the Israel issue, that are uncomfortable with my position, and I sometimes fight with them. But I'll tell you, it's important for building a software company that you say in public what you say in private. We kind of just think these things that are happening across college campuses especially are like a sideshow. No, they are the show. Because if we lose the intellectual debate, you will not be able to deploy any army in the West ever. Right. And of course our adversaries. Why don't we talk about why there's no tech scene in China or Russia? Like, there is no tech scene. There are no software companies. Why don't we bring the intellectual battle to them? Hey, you want a tech scene that can support your GDP? You've got to have a free, open, meritocratic, diverse, intellectually curious environment where you get to keep the equity that you build. Like, we're just not showing up for that debate, and that is the debate where we win or lose.
It was a fascinating conversation. Nobody held back. Eric Schmidt was part of that panel. David Cohen, former CIA deputy director, was part of that panel, and it was quite something to see them all debate the future of war and technology's impact on it.
Just his take on these things.
Always
makes you think on a different level.
An enigma wrapped in a riddle. He always emphasizes I'm progressive, and then he goes on to just sound like a huge right winger, right?
Well, but you know where he's voting, so there you can.
I don't know where he's voting. I don't really care, but he's a Biden guy.
I don't think he's a Trump guy. Anyway,
well, that could, there's a lot of reasons why people do one thing or the other, right?
Phil DeBoe is still here with us on set. He's got a special guest who is joining us at this point, too.
Yeah, let's bring in RJ Scaringe, CEO of Rivian, the company reporting their Q1 result at Bell last night, wider than expected loss. RJ, your stock is under pressure today, and I think a lot of people are looking at your guidance for the rest of this year. And on one hand, there's relief that you affirmed your guidance in terms of production and your targets that are out there. On the other hand, I think people are looking at the EV market and they're not sure what to expect. What's your take?
Yeah, I mean, there's an ongoing discussion just around how rapidly the entirety of the automotive industry is going to electrify. And our view and our conviction is still very much that over time we'll see the entirety of our vehicle population move to electric propulsion. But this is going to take time, and key for that is giving customers lots of choices.
And speaking of choices, you've got the R2, which is your next model, which is a crossover utility vehicle or a small SUV, however you want to phrase that. You're going to build that in Illinois. You're going to have lower CapEx this year, in part because you're not building in Georgia. Are you confident that you can begin production by the end of next year and start deliveries perhaps in the first quarter of 26?
You and I talked at the launch event for our R2 and our R3 products. We couldn't be more excited about it. This is exactly what we're talking about in terms of creating customer choice. And our decision to launch the R2 out of our normal Illinois facility, as you said, was not only to drive capital efficiency, but importantly to remove risk from the time of launch and also to allow us to start deliveries in the first half of 2026. And we're incredibly confident in the product and confident in the execution of that launch.
RJ, a lot of people say we're entering an EV winter, if you will, and that it's going to be tougher to sell EVs to people, especially here in the United States. What do you hear from most of your customers? Are they coming out of internal combustion engine vehicles primarily, or are they coming from other EVs?
Yeah, the significant majority of our customers have never owned an EV before. So their first EV experience is through the lens of Rivian. And that's really our goal. Our goal is to take the more than 90% of customers who aren't buying electric vehicles today and give them an awesome choice, something that's really exciting and desirable and great value for the money, and pull them out of their internal combustion vehicle into an electric vehicle. And we've done that with the R1. So our R1S is not only the best-selling EV over $70,000 in the United States, but in California, it's the best-selling vehicle over $70,000.
You have agreed to make Rivians compatible with Tesla's charging network, and that you'll be able to use the supercharger network at some point. Are you worried about Elon Musk basically gutting the supercharger division at Tesla?
We're really excited about the way we've approached charging with our partnership with Tesla. We have a great technical relationship with the teams within Tesla, and for those who have used our vehicles on the Tesla network, it's very easy. You drive right up, you plug in to charge. All the payments, all the back end work is our software team worked on with Tesla's software team, and that's still very robust. But in addition to that, we're also building out our own charging network, what we call the Rivian Adventure Network. This summer, we'll be opening that up to non-Rivian customers as well. And and key for charging network is uptime. And there's very few networks that have very high uptime. Of course, Tesla's network, 99-ish% uptime. Our network also about the same, 98.5% uptime. So these are incredibly high performance networks, both of them. And as we continue to build out our network, in addition to what you see with Tesla, we really think this is an important part of pulling more and more customers into electric vehicles.
Hey, RJ, there's been some speculation, you've seen the reports about a potential partnership between Rivian and Apple, which of course killed its own car ambitions, but may still have other ambitions, and people speculating that maybe a partnership with you could lead to something. Can you speak to what's going on?
We don't comment on speculation or rumors on these types of things. I would say that as a company, we've got a history of great partnerships. Our largest shareholder is Amazon, and that partnership we're starting to see manifest on the roads every day with our delivery vehicles that we build for them.
Let me ask you in one slightly different way then. You have been very outspoken about having your own operating system for the Rivian. I think that's clear. You spent a lot of money and time building that. Would you ever share any of that space with a potential partner or not?
Yeah, it is a great question. We've approached the entirety of the electrical architecture, the network architecture, so it's all the ECUs or the computers across the vehicle, and then the software that sits on top of them, from the view of building that ourselves. So it's all vertically integrated core technology. It's been the foundation of a lot of what we built as a company, and so this certainly has value outside of beyond just our own products. And there are lots of different ways we could look to leverage that, but we don't have anything to comment on today. But it's certainly something we recognize of significant value.
All right. RJ, hey, thanks for joining us. RJ Scaringe, CEO of Rivian, after the company reported their Q1 results. Lots of news, guys.
A lot of news this morning.
Coming up, AEI, American Enterprise Institute President Emeritus Arthur Brooks will join us in this season of unrest. He's making an urgent plea for freedom of speech and respect for diversity of thought on U.S. college campuses. Squawk Box will be right back.
off.
Our next guest has some ideas for calming the unrest on college campuses this graduation season. Let's bring in Arthur Brooks, President Emeritus of the American Enterprise Institute, professor at Harvard, and a columnist for The Atlantic. And I don't really understand a lot of what's happening. I think there's percentages of why a lot of students are involved. Some of them aren't students, obviously. You try for happiness. I think some people that age are just happy when they're demonstrating. I think maybe that, but to me it looks like they're very unhappy with living in this country and what we stand for.
Yeah, I mean, I do a lot of work at Harvard with the alumni, and the alumni, they love their reunions, and usually they bring me in because I'm the happiness professor. I talk to them about what they really want to hear about, which is love and happiness, and they're just befuddled by what's going on the campus. At my university, at every university, it's like when I was here, we liked each other, we disagreed, we loved our professors, we were challenged to learn new things, and the truth is that the difference between what our alumni experience and what a lot of young people are experiencing today on campus is more activism, less intellectual inquiry. Over the last decade or two, activism has gotten more and more and more prevalent on these campuses. It's too prevalent, as a matter of fact. You go to college to learn things and to be challenged, not to be told that one side is right and the other side is evil. That's the biggest problem, and so the balance is all wrong, and that's what's actually led to a lot of the upheaval we see today.
I mean, some of it looks like activism for the sake of activism.
Yeah.
And you can, they show up at, one week it's this cause, the next week they'll be at a demonstration for that cause, and it's over the past 5, 6, 7 years we've seen how many, it's Wall Street, it's Occupy Wall Street, we gotta go, it's their fault. Now it's Israel's fault.
Yeah, I mean, activism has a too big a place in American life today. I mean, I'm not against activism per se, it's always existed, but when it becomes too prominent in American life, you see what you see. Look, I talk to CEOs all the time. And they're figuring out that 3% of their workforce are just professional activists that are blowing up their Slack channels and calling them all sorts of names. These are also, by the way, unproductive employees, and they can do something in the private sector, fire them, and that's what they're starting to figure out. We also find that political parties have been completely hijacked by 5% activists. Look, the rest of us are the 90% who don't hate each other.
No, I'm the 5%. Don't say the rest of it.
But the 5% extrinsic margins in political life today are a big problem for the rest of this country. It's the reason we can't get along.
So you're saying we need, obviously, diversity of opinion. Now we're saying that. We need a diversity of opinion for the protesters. You weren't allowed to have any conservative come to a commencement exercise. You weren't allowed to have them speak at any of these colleges. They were going to be demonstrations if someone that was the slightest bit right of center came. But now, all these ideas got to be aired. Pro-Hamas ideas are fair game.
We're starting to figure out on campuses, for whatever reason, that free ideas and free thought, the interchange of, like the competition of ideas is fundamental to a free society. And however it comes about, I'll take it, quite frankly. I mean, I'm doing commencement exercises at Providence College in a couple of weeks.
Well,
I mean,
you're lucky there is one.
Yeah, no.
Commencement.
Well, it's also a Catholic school that has a lot less of this activism going on. But you're finding more and more that people are going to be a lot more tolerant of different points of view. And if this is what brings it about, man, I'll take it. Because you know what? This different points of view being aired on college campuses, that's what college is all about. It's not to be safe. It's to be intellectually unsafe. And that's the most thrilling thing of all.
We had Frank Bruni on the show last week. He had a book out called The Age of Grievance.
Yeah.
And this idea that the whole country and maybe world is in a state of grievance. There's more grievance than there's ever been before, and that the grievance feeds upon itself, which is to say in social media and all of the different sort of communication channels we have, people are almost always trying to one-up each other on grievance. And it made me think, how could people get to a place where they want to one-up each other on happiness or on satisfaction, or is there genuinely more to grieve about?
There is certainly not more to grieve about. Are you kidding me? The world's better than it's ever been. I mean, there are lots of things for us to worry about. There are lots of things that we should improve. But the truth is that our standard of living is rising. Our health is getting better. Our environment, at least in the United States, is getting cleaner. We have more freedom than we've ever had. We should be celebrating.
Okay, so
but
then how do you explain the level of grievance
because
that's happening on campus, that's happening everywhere? By the way, I think part of it is media and social media, because people are seeing the distinctions between where they are and where they want to be in a way that they didn't before. And you could argue that maybe that's good because it's transparent, you can see where you could go, but also it breeds envy.
Yeah. Well, of course. I mean, we actually have envy, but more than anything else, we find with social media and the culture that we have today, that you have people who are expressing virtuous victimhood. That's their sense of, they're the prestige that they actually get as leaders. And that's a kind of malignant narcissism. And usually in about 50-year cycles, the United States gets kind of taken over by these activists who will have this malignantly narcissistic, Machiavellian, even sociopathic kind of leadership that celebrates victimhood as if it were virtuous and try to make people live in grievance.
How does it end? I mean, if this happens in cycles.
And it took a long time for colleges to staff their entire administration with this echo chamber of left and America hating individuals.
For sure, but the greatest thing about this is that America always wins out because people get sick.
Until now.
People get sick. No. This is you're going to see things are absolutely going to get better, and they already are starting to turn because we're having this conversation. We're not afraid to have this conversation on national television. We would be if this actually were getting stronger and stronger. This would be taboo as a subject. On the contrary, we're calling it out. We're laughing at it at this point. You know what? It's going to get better.
I remember in one of your first books that I read, you talk about actual percentages, and we're probably still there. 60% of people are probably not of this mind.
Of course. Is that the one you paid Andrew to read?
It is. Yeah. And $1 a page, and he charged me for the index.
For the index? You read?
But he says he did. You charged me for that too. It was like,
I'm
a businessman.
Well done, well played.
I don't.
Thank you. I didn't even get paid for the index.
Can you read it again?
But the truth is that we don't hate each other in this country. I do believe, just as was in the 70s, as we proceeded through the 70s, after bitter polarization in the late 60s and early 70s, that we got toward a better time. when leaders actually do bring us together, because people get sick of it and they say enough. And that's what we need to do. CEOs need to say enough with the activism of my culture. We have to stand up to our parties. And by the way, the only way to do that is to stand up to our own side, whatever that side happens to be.
You know, are there people elect the members of the squad?
You know, I understand.
Where are they? Where are those communities? And what are they thinking?
Well, what they're thinking is are these leaders actually good for doing the things that I need in my particular district? They're not thinking about that. You know, of course, they're not thinking about what is this actually doing to the body politic.
Okay, and Marjorie Taylor Greene gets elected. Okay, I don't know, what do they think? I'll give that to you. I know you're looking at me. I know you're looking at me. I felt
anymore. It's pretty good.
It's my presence.
You guys have the jokes numbered on the show.
There's only so many of them.
We finish each other's. Yeah, I recycle a lot of them.
No, but it's true. And if all of us can look at the political environment that we're in today and say, look, people on my side. Look, I've always been a center-right guy. Capitalism, 3 cheers. American defense. You know, traditional life.
Work,
absolutely. You know, these are the things that I really believe in. But people that are trying to radicalize the right are hurting America. And that's what I need to be talking about. Why? Because people on the left are not my enemies. People on the political left are going to challenge my point of view. Look, I want to live in a country where there's a free exchange of ideas, and that means I'm grateful for the people who disagree with me. I need people who disagree with me. I love people who disagree.
I love you, Andrew.
Thank you, sir.
Look, I bring people together. Unbelievable.
Can you stay?
Thanks.
Oh yeah, it's my favorite show.
It's the only place you can really find us, I think.
Yeah.
Versus the echo chambers. You know.
I love this. This is a real discussion every single day about what's going on in America.
Thank you, Arthur.
I'm not that happy about everything.
Thank you. Fine, Joe, I promise. Okay.
When we come back, Lyft CEO David Risher will join us after first after following the ride-hailing company's better-than-expected results. Stay tuned. You're watching Squawk Box, and this is CNBC.
Stanley.
Welcome back to Squawk Box. The news this morning I want to talk about it. The Justice Department and SEC investigating whether Tesla committed securities or wire fraud by misleading investors and consumers over its vehicle's self-driving capabilities. It's according to a new report just this morning from Reuters, citing 3 people familiar with the probe. Former SEC Chair Jay Clayton joins us right now on the Squawk Newsline. Of course, Jay Clayton, when he was the SEC Chair, had brought a case against Elon Musk. Jay, what do you make of this news, and what do you think the prospect of charges, either criminally or civilly, being brought?
Andrew, good morning. The news doesn't surprise me, and I think there were rumors about this a little over a year ago, and it doesn't surprise me because of the attention that is paid to this company, the step change in technology and practical application that autonomous driving would bring, and frankly the fact that many analysts have touted this as a comparative advantage for Tesla.
There's sort of 2 questions that the report raises. One about comments and that Elon Musk has made to investors about the timeline with which we'd see full self-driving, and the other to consumers, some of whom have paid for vehicles that have, quote-unquote, full self-driving capabilities, or at least the system in place so that when it's ready, they can drive it and use it. Of course, there were expectations that would be available already years ago. And so how you think that either a criminal prosecutor or the SEC might think about those 2 things?
Well, a couple of things here. First is that, and I'm just citing the story, the mail and wire fraud statutes cited by the DOJ, and the securities claims about the SEC. They have many of the same elements, Andrew. I think the people understand that the wire fraud statute is remarkably broad, and the securities law, I would say, is a subset of that activity, if you want to be pretty, what I would say is high level about this. And it involves an intent to defraud customers, or an intent to defraud somebody in an investment decision, which has to be proven. And what I'll note here is there's a lot of atmospherics around this that we all know call into question when and if self-driving would actually be realized, including regulation, insurance, all sorts of factors that are beyond the control of a company. So this is not as complicated, or not as simple as a simple statement and reliance
The
thereon.
intent is very interesting because having covered Elon Musk for a very long time, he does have expectations, very high expectations, and I think genuinely does think that things may come quicker than they sometimes do on one end. And yet on the other, I imagine inside of Tesla, there's debate happening, email traffic with one engineer saying, it's going to take us a decade. We're never going to be able to do what we're telling folks to do. And others saying that maybe we can, and sort of, would that create a legal liability?
Andrew, you used the perfect word there, expectations. And expectations can differ, and we've seen through time, particularly in technology, where expectations have been way too rosy. And we've also seen circumstances where expectations have been way too pessimistic. I go back to the days of doing deals in the mobile phone area, where the projections about what we'd be able to use our mobile phone for, were grossly understated. And then you have things like, could we ever, and right in the Musk area, could we ever do what he's done with SpaceX? Could we ever have commercially viable astronaut launches? There was great pessimism that the U.S. could never do that. So, and then there are times when expectations, prove to be wrong. It's one of the amazing things about tech investing is that reality and expectations are often out of whack.
Jay, we appreciate you calling in, helping us think through some of this. I'm sure we'll be talking a lot more about it with you very, very soon. Thanks.
Thanks, Andrew.
Coming up, CEO of Lyft joins us on Quarterly Results. We'll be right back.
welcome back to Squawk Box. Shares of ride-hailing platform Lyft jumping in the pre-market. This after the company guided to higher than expected gross bookings and core profit for the current quarter. Joining us right now is Lyft CEO David Risher. Good morning to you. David, we spoke with Derek Khosrowshahi earlier today about their earnings. Clearly, you beat here, and the stock now up about 4 or 5%, and it sounds like your expectations are that things are improving. What are you seeing?
Customer obsession drives profitable growth. That's what I see. That's been our strategy for the last year since I took the job. And I love what I'm seeing, right? We're up, 23% in rides, 21% in bookings. And it's because it turns out when you do really good work, when you get pricing right, when you get ETAs, pickup times fast, customers take you more and more. And it's just wonderful to see riders and drivers on the platform getting out and about, living their best lives.
How much, though, is this about pricing? There are clearly markets where I think that you've become much more competitive on price.
About a year ago when I joined, we really decided to price competitively. And we haven't made a real change to that strategy in the last year. So I don't think our incremental growth, let's say, we've got more new riders than we've had in 6 quarters. I don't think that's really about pricing. I think it's about sort of all the above. Price right, pay right, pick people up fast, innovate, Women Plus Connect, and other sorts of things. I really think it's, I'm kind of proud of what the team has done. We've done a lot of things right, and I think people are responding for that reason.
You said all sorts of other things. I want to talk about all sorts of other things because I think there's a whole number of partnerships, including the one that you have with Chase and JP Morgan and some others that may be leading to some of the increased pickup in terms of folks using the product. How much do you ascribe to those promotional partnerships?
Yeah, so it's about 20%. 20% of our ride volume comes from partnerships. But I wouldn't just say that they're promotional. They really are meant to be deep partnerships. We're one of the very few companies that Delta allows to earn SkyMiles on their when you take a Lyft. You mentioned Chase Sapphire allows us to accumulate 10x points. I don't want to sound too huckstery here, right? But these are partnerships with really important companies that take customer obsession really seriously. And by partnering with them, we do great things together.
Do you have any concern about what you're seeing in the marketplace at all about the strength of the consumer trading up, trading down around the country? Are there pockets where you're seeing any weakness? And frankly, on the other end, are there pockets where you see strength? And what I'm asking this is not just Lyft-specific operational, but what you're seeing in terms of economic impact.
Yeah, this is so interesting. Let me give you a couple of data points. We ask our drivers every quarter, how do you see sort of the economy? We don't quite ask it in that term. We kind of see, are things getting better or worse? And we haven't seen any change in their, and we've got about 1.5 million drivers on the platform, 1.25 million drivers on the platform. So that gives us a sense that they don't see any particular weakness. When we look within our segments, commute is actually up, which sort of makes sense because a lot of people are still going back to work. Party time is up. Party time is after 5 o'clock on Friday and Saturday nights, up 26% instead of 20% or 22% our overall growth rate. And then when we look at modes, Wait and Save, for example, Wait and Save which is our sort of economy option, is actually flat, and the premium modes are actually up a little bit. Our premium modes are actually growing faster than standard. So, it's so interesting for all the discussion about, economic concerns, at least, in the sort of $20 to $30, kind of average ride, we're actually really not seeing that. In fact, if anything, we're seeing little indications of the opposite, which I know is maybe unusual, maybe not what people expect, but it's what we see.
David, we want to thank you for joining us. I want to congratulate you on the earnings this morning. Appreciate you joining us and look forward to seeing you again very soon, hopefully in person.
I'd love that. Thank you so much.
Thank you. Meantime, let's take a quick final check on the markets. It's been a lot of news to digest today as the program has rolled on. The Dow looks like it would open down about 54 points. The NASDAQ off about 98 points. The S&P 500 off about 20 points. Let's show you treasuries as well. Right now you're looking at the 10-year note at about 4.494, the 2-year at 4.843. We had those earnings from Lyft on one end. Both Lyft and Uber saying consumers they think are in better shape maybe than we expect, but obviously we saw Disney yesterday and things, that stock had fallen. Uber, by the way, did fall on the fact of those write-downs in some of their business, but now we're also looking at this big Tesla story and what is going to happen legally with that company and one of the richest men in the world. So we will see.
It's Wednesday.
It is Wednesday.
What? Hump day.
Hump day.
Yeah. Mike.
Won't be long.
What's that?
Thursday's the best day. That's tomorrow.
It is.
Thursday is the best day. We are going to pass it off to our good friends on Squawk on the Street. I think that David Faber is still out in L.A. Milken Conference, so we'll be
He
seeing
forgot
him.
his ties.
Make sure
All I
you
can
join
figure.
us tomorrow. Squawk on the Street begins right now.
Every day.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer. David Faber's back at Post 9 of the New York Stock Exchange. Little equity pressure pre-market as some well-known names guide lower. Shopify, Uber, Intel, Twilio. Oil below 77 for a moment. That's almost a 3-month low. Our roadmap begins with Tesla, though, under the microscope today as federal prosecutors reportedly examining whether the company committed securities or wire fraud in their autopilot probe.
Also ahead, we got some growth stocks that are moving in different directions. Reddit, for example, recent IPO surging. Uber's down sharply. Shopify really down sharply. The president will join us this hour. And on the AI front, President Biden is going to announce the plans by Microsoft. This is Microsoft money, not federal money. They're going to build a $3.3 billion data center in Wisconsin.
Let's start with Tesla, though. A source is telling Reuters the Justice Department is investigating whether the EV maker committed securities or wire fraud by misleading investors and consumers over its vehicle's self-driving capabilities. Tesla's autopilot and self-driving systems assist with things like steering and lane changes, but are not fully autonomous. The report also says the SEC is investigating Tesla's representation about driver assistance systems to investors. So, Jim, I think they're quoting 3 sources over at Reuters.
Right. Look, and I know, David, we can go into this. I don't want to. Well, this is obviously serious news. The problem is that I've always found that when you're talking about what the Justice Department is and isn't going to do, it's a really high-risk endeavor. I'm not saying at 9:02 I should be disputing a story. I'm not disputing a story. I am saying that the Justice Department examining is very different from the Justice Department indicting. And I just think I should point that out because it's only fair to do that.
Without a doubt. And that's the way it's supposed to work. Investigate, decide whether there is actually something to charge, and then do so or don't.
Right.
And so this is early. Reuters, again, in reading, this is all Reuters reporting, not ours at CNBC. They say investigators are exploring whether Tesla committed wire fraud. They're not saying that they actually did. So, you know, if you're an investor, maybe you take a pause here briefly in terms of digesting this potential news and what it could mean if, in fact, they were to move forward as an investigation into, as you say, an indictment. But it seems as though it's a ways from that. The SEC also said to be investigating the representations as well around the driver assistance systems. And again, that's civil.
Right.
The other side is criminal, more serious.
Right. And, you know, I mean, Carl, I've covered a lot of stories involving justice. I know a lot of people in the Justice Department. And I just know that the thing that they do not share is that they're going to indict. They could share that they're examining. They have often said to me, listen, we will not confirm that we're examining. It's very rare that you actually know their intent. Not diminishing what the story is going to do to the stock. The stock was going to look weaker anyway because the Chinese story seems a bit of a dodge because we're not ready yet for self-driving there or here. Phil LeBeau, some excellent reporting this morning. But I just think to sell it on this versus selling it on the fundamentals is a mistake because it's a dangerous story. Dangerous.
That's why you would expect Reuters to take caution in reporting it in the first place. We'll watch it, obviously. The other news regarding Tesla, as you point out, Jim, is dispatching a top executive to China. Right. The hopes for unveiling robo-taxis over there in a certain time frame.
Well, I just feel like this sudden story about the excitement of robo-taxi is not unlike the excitement of robo-taxi that we saw in San Francisco. It's not like the excitement that we saw robo-taxi when Hertz was going to buy 100,000 Teslas. David, the excitement of robo-taxi is a little bit of sizzle, not a lot of steak at this point anywhere in the world.
No, well, it doesn't actually exist.
Right.
Yeah.
Well, I mean,
but the prospect of it is once again here. Listen, I mean, to connect these two, obviously the SEC and/or Justice looking into comments and statements made years ago that indicated, of course, the possibility of full self-driving was around the corner, and by that I mean very close.
Right.
And that's been a history, as we know at the company. That said, it feels like this time it's really coming.
Well, look,
this time, you know, and the advances that have been made in terms of the way that they are training their current systems at Tesla are different.
from other EV.
From the way others do it, and maybe in fact a result as well of advances that have been made in terms of the data center, in terms of NVIDIA, in terms of what they can actually get, and how they're using generative AI to actually help. So maybe it really is around the corner this time.
Right, I mean, Rivian, a question on the call, and the call, by the way, I want to be sure people understand, the call is not upbeat. You can, someone wants to claim it's upbeat, that's fine.
Which call you're talking about?
The Rivian
call.
You know, they already mentioned the NVIDIA, but the Rivian, I was ready to go to Georgia for the big plant. Okay, they're normalizing, meaning they're going to be building that plant normal. They got an Illinois deal. But Dave, just to complete the thought about self-driving, I was in a very exciting pre-self-drive cruise with GM, with the head of Cruise.
Yes, I remember.
And within a month, the head of Cruise was left the firm, and they shut down Cruise. And so I just think, you know, Carl, it's really, you should buy a stock because the numbers are good, and you should sell a stock because the numbers are bad, okay? I'm just that. I'm not a big thinker, okay? I am a thinker about the forecast is the forecast, as Frank Slootman said on Mad Money. And you know what? I sat there and I said to myself, you know what? The forecast is the forecast. And it wasn't the Justice Department. No, I would like it to be big thing. There's sometimes I like to sit back and think, you know what? What will be like to live on Mars? But that's not what it's about. It's about the forecast.
Yes, David Bowie can tell you what that's like.
We're going to speak to Harley Finkelstein, okay? He had an amazing first quarter. But the forecast is the forecast. And I don't want to get outside. I don't want people at home to think, you know what?
Well, the forecast here calls for pain.
What are you, Mr. T?
Yes, I can be. Love Mr. T.
Mr. T was pretty great.
Jim points out some of the moves we're getting based on guidance today. Shopify is one good example, down 18 pre-market on, is it gross margins down quarter on quarter?
50 basis points. And, you know, I'm going back and forth with Harley ahead of the interview just because I obviously want to know my stuff when I see a stock down like this. And if you have any sort of chink in your forecast, this market's blowing up. Now, I mean, David wasn't here yesterday for the Disney blow up.
No, but we were on air together, as you recall.
You know, you have to try to figure out whether it's chemical warfare, whether it's H-bomb, or whether it's just conventional weapons. And I think that was a combination of all three that they toured that one because they mentioned that the parks had a little weakness.
That was it. It was all about the parks. You came in, you got the number, in fact, maybe even a better number than you expected in terms of direct-to-consumer. But you were reminded once again that the biggest contributor to earnings is the parks, even though as a revenue percentage, it's what, a third, but it's over 50% of the bottom line, given the margins at parks. And when Hugh Johnson said that I mean, we're not even sure exactly what it was.
I wanted to give him a can of Pepsi.
What was it? That he, like, is he saying things really are getting weaker? Because that's what everybody was, all right, what does that mean?
The end of the travel as we know it in the United States story, which was confirmed by bookings, which is a really good firm. Glenn, I mean, those guys have no flies on them. As opposed to TripAdvisor, who, by the way, could not find anyone to buy them, so that's why that stock's down horribly. But I go back to the Disney and I say to myself, you have a little chink.
Well, the parks are softening. By the way, that's another.
But there's another company whose parks weren't softening.
Our parent company.
That's right. And I intend to not even say it's the parent company of our network. I'm saying the numbers were just flat out good.
They were.
Taking that off the table that it's a parent company.
We're all about theme parks here at Comcast.
New Mexico.
Meantime, I think the title of the Barclays report is Why Disney's Sell-Off is Overdone, Jim. The park commentary, the, quote, obvious concern, and is likely to fuel its own narrative, basically on pricing growth.
Well, I mean, look, the parks have been pristine. I mean, everyone knew that why would you ever sell Disney? The parks are humming. And the parks weren't humming, and no one really knew that. That was the news story. And then, you know, David, obviously, anyone can make light of some DTC number, but the parks were rock solid. So suddenly, if you hear that the parks are rock solid, and you realize that travel in the country has actually gotten less strong. We're actually, by the way, the airfares are down versus the last 3 months, quarter to quarter.
But it is interesting if there's a wider read there as you read Barclays on Disney in terms of concerns with respect to the parks maybe being overdone in their opinion. There is a wider theme about the slowdown in the consumer we have been talking about now for weeks. Sort of somewhat anecdotal. We've been looking at various companies, and it's not consistent. Even on the restaurant business, it's not consistent. You can look at this one and say, yeah, that doesn't look good.
was great.
But then Texas Roadhouse blows it
was
up.
unbelievable. They had fantastic
Right.
comps. Hey,
So-
David, you know what? I can tell you that I think that the Dutch Bros had better comps than
The
than
Dutch
Starbucks.
Bros. Dutch Bros.
Plus 10 versus minus
remember
3.
those
That
guys
could
from
be
the old neighborhood. They were a rough bunch.
Which one?
The Dutch Bros.
The Dutch Bros are dynamite.
Stay away from them.
Dutch Bros has the Annihilator. That's the one you can be up to 3
See what I
miles.
mean? Dangerous guys.
Did Dine Brands today with a double miss.
Dine is, I don't know what's happening.
When they came around the corner of the Dutch Bros, you just wanted to clear out. Look, can we get
What
back
was
to
that,
Shopify?
From Queens?
Yes. Can we get back
Janet
to...
Yellen told me that Brooklyn was tougher than Queens, just so you know.
Well, we were different generations. Can we get back to Shopify for a moment? Because
Yeah, but we're gonna have Harley.
we moved past a 20% decline in the stock price pre-market. When we open 20 minutes from now, we'll see if it holds. But that's a $100 billion company going to be down 20%.
Can I
and
get
you're
my,
like,
can I get my Shopify file? No, I'm not dismissing it. I just know that we're going to give a lot of the show to Shopify, so I was trying to kind of, parse out the show.
I don't know if we're going to give a lot of the show to
Okay,
it,
so
but I'd like
top
to
line
understand.
momentum was terrific. Bottom line profitability was great. This is all first quarter, but they mean nothing. Why? Because as we read this morning in No Doubt, a Reuters story, which is just, Reuters has got it in for everybody. No, it says Canadian e-commerce platform, I'm actually reading, which means therefore I'm not dignified. Its slowest quarterly revenue growth in 2 years against the backdrop of an uncertain economy. Core clientele doing okay, but they expected second quarter revenue to grow at a high teens, and disappointing investors were looking for plus 26. Now, of course, they did sell a division. Harley's going to defend that, but David, this is a company that is the beat and raise machine.
Yeah.
And it beat, but it did not raise. So it's no longer the beat and raise machine. It's just a beat machine.
It's just a beat machine, but it's getting beaten today.
Yes.
Yes. Okay.
Yes.
How about Uber?
It's a beat and raise machine.
It is, and the EBITDA number was fine, and people are this morning raising why were FX is part of this story here, but Meta had FX. Why wasn't this sort of already incorporated? And yet you're looking at a stock that may be down as much as 7.5%.
You want to be vicious? Lyft's numbers were very good. David Risher did a great job.
Also guiding Q2 gross bookings below.
True, but I just, I thought.
Although Dara had some upbeat things to say about return to office.
Yes.
And the cart deal, the deal with Instacart, and even some travel trends.
Look, I saw that stock down 5, and I honestly, I was out the moment that it was down 5. I was at my desk, just proving that all I care about is the forecast in life. And I said, okay, this stock could be up or down 5, but they're going to isolate a couple of things. And tomorrow, someone's going to upgrade it, like they did Datadog today, David, to just jump all around like you love me to do.
I do.
Tomorrow, someone will upgrade Uber and say this is your buying opportunity of a lifetime. Not unlike Builder's First Source, which was down 19% yesterday. I'm just waiting for the upgrade.
Okay.
But instead, they give me floor and decor.
But we are going through a lot of names that have responded negatively to earnings.
Yes,
and
we
it
are.
hasn't because of the reported quarter, but it is, as it often is, because of the guidance.
Because there's a slowdown, and no one seems to want to talk about the slowdown. I like to look at actual things that aren't subjective, but are objective. Nucor, steel company, best steel company in the world. Hot steel, hot rolled steel is made for autos, made for industrial. They had the first decline. That is often the beginning. You don't have one decline in price. It's the beginning of multiple declines in price. That is a great objective thing to look at.
All right, so you said it, and we can keep talking about it. A slowdown.
We are now in the brown shoot moment. I'm now calling it a compost of brown shoots. That we're going to see a lot of numbers that are going to make it so the Fed has to cut.
Is Jerome going to move a little faster?
Yes, absolutely. And he knows, he watches the show, and he will. Okay?
Forward earnings keep ticking higher, Jim. We're closing in on 244 now for the year.
It's like this.
Really? You think we're rolling over on earnings growth?
Right now, on the things that really matter. Housing. Yesterday, if you were on the Builder's First Source, which provides almost all the materials for every single major housing, their forecast was not slightly down. It was bad. Okay? Their forecast was bad. They have inventory issues, I think, that are developing there. We are getting inventory issues at Kellogg.
Kellogg. Wait, Kellogg or Kellanova?
No, Snack did okay.
No.
Kellogg. And what I'm saying is that you're not hearing those words. You're hearing
Kellogg is a $2 billion market cap cereal company.
Will you let me talk? We're getting a term called normalization. That's code for, you know what, we over-earned and now things are coming down. Okay? And that's what Jay knows. He understands the code. Normalization is the code word for we are slowing down. By the way, you know who else used normalization?
Who?
Disney.
Excuse me, who?
Disney.
Disney, yes. Oh, they did, you're right.
They used normalization. Right after the next paragraph after they talked about travel, they used the term normalization. I said, well, that's it. Normalize, see you later.
We're going to start using that here.
Normalize means see you later.
Okay, I like it.
Okay? C-Y
I love that.
later.
We do 15 minutes, we're all over the place, and then we end somewhere really important.
Yes.
I wish I were an intellectual.
We are going to get
we wish you were too.
some wholesale inventories to Jim's point in about 45 minutes. We'll get to Microsoft, a $3 billion AI investment in Wisconsin with the president today. And we'll run through Reddit, Fox, Trip, Bud, Affirm, Snap, and more when we return. AI is definitely in focus this morning. The president is set to visit Wisconsin today to announce plans by Microsoft to invest $3.3 billion in a high-tech data center. The facility in Racine County will be built on the same land where Foxconn had once planned to construct a $10 billion factory. As the Journal points out, Jim, former President Trump once called that the eighth wonder of the world.
Right.
Didn't happen.
Right. I mean, look, obviously, the cynic says battleground state. You've got Michigan, you've got Wisconsin, you have North Carolina, Arizona, Nevada, Pennsylvania.
Yeah.
So will we see different things happen in all those states?
You can attach yourself to the spending by the hyperscalers on AI. Why not?
Right.
This money, my guess would be, will be spent, and this will be created.
Yes.
Because we know about the needs for it. We commented numerous times about the enormous capex by Microsoft, by Alphabet, by Amazon, by Meta, Apple as well, although they don't break out how much is for AI. And this is part of that number. You go to places where, conceivably there's a good amount of land, and as we point out so often, you want access to cheap electricity, hopefully renewable if possible as well. That's a key part of building these data centers.
I'm so glad you mentioned that.
And then, of course, what do they get filled up with, as we've discussed so many times? I mean, this will get filled up with Blackwell.
Right, it's Blackwell. Now, can I just say, in terms of the quarters that we don't talk about that I thought was the best last night, Win was very good, and I like Red, we'll talk about that. But Arista Networks, which is this company that really is the plumbing, this is, oh, you have it, Jayshree?
Yeah, no, I pulled the call.
Right,
Arista Networks call, because
she calls them Titans, and I love that. So I'm changing my whole.
And by the way,
I was using hyperscale. I'm calling them Titans.
We'll go into detail when we open on Arista Networks. No, that's all right. Listen, I think an important point here as well, just so people aren't confused. This is not U.S. money here. The CHIPS Act, where we've talked about Micron and we've talked about Intel building fabs. This is very different. This is a data center. This is Microsoft's money. Obviously, part of what could be as much as $50 billion in spend this year. And remember, they were asked in the call, could you get to $100 billion, and they didn't dismiss that as a possibility.
Well, remember, Jason Wong told me I mentioned how many Blackwells can he sell, and he said like Amazon would buy all of them. I mean, everyone's on allocation, and it hasn't even been made yet. Right. What kind of product is that? Everyone's on allocation.
It's, as I pointed out yesterday, I don't think we're appreciating quite how much it's going to change everything.
Well, I thought that's one of the reasons why.
You've got something 30 times more powerful operating in data centers. I mean, we maybe look back at this period before the machines took over. That's sort of that quiescent period. I don't know if we'll look back on it with great fondness or not, but the world is going to change.
I was going to say this stuff selling like hotcakes, but as you pointed out, 9 brands, this number was miserable. David, you're reporting on this notion of the new industrial revolution is true, but the industrial revolution is not going to be televised. It's just going to be done by the Titans. And one day we may look back and we may think, remember the Titans. Who's the coach? Who's the coach?
Gene Hackman? No.
Coach Boone.
That's another deep track, Jim.
Yeah, he was whispering Gene Hackman, thinking Hoosiers.
Oh, Hoosiers.
Get your sport right.
That was Hoosiers.
Double
right.
O.
That was basketball. Got it. Yeah.
Great movie. But anyway, yeah, I think that.
Oh, Denzel. Is that right?
Yes.
Yeah.
Yes.
But Titans is really, as Jayshree calls it, is about where the spending is happening, and she's in every single one of these. So is Broadcom, by the way. Let's give Broadcom its
Yeah, we'll keep an eye on it. Nadella on Good Morning America today, definitely selling it to a broad audience.
Oh, fantastic.
When we come back, Kramer's Mad Dash, the opening bell. Busy morning shaping up. A lot of names we've not yet gotten to. Futures in the red. Stay with us. Take a look at some laggards to start the morning. Uber's number 2 there. We just mentioned the bookings number. Roughly in line, you could argue, but mostly the guidance for Q2 bookings ends up being a bit light. 39.5 billion at the midpoint. Streets just around 40. We'll keep an eye on that name, which looks to open down about 8%. Opening bells coming up in a few moments, and don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
All right, let's get to a mad dash with the man to my right here. You want to talk a little upstart, not just about the company, but the broader implications.
Right, not a big company. It's an AI lender. Okay, a firm is too, and a firm at good numbers. So I don't want to draw any conclusion other than the fact that David Gerard said this. He's the chairman of the board and CEO about why the stock is down, and this just gives you the sense of where some people are thinking. He goes, unfortunately, consumer risk and interest remain at or near all-time highs, conspiring to constrain the volume of transactions on our plan. Now, see, I didn't know that, to me, interest rates are not remaining at all-time highs. It's that bad. But consumer risks. Now, I don't think that it's as risky as he does, but he's in the business, I'm not. And he's saying that this is a moment of peril when it comes to lending. And so that's the kind of world that we're in, where if we had Brian Moynihan on the desk, I think he wouldn't say that, but it doesn't matter.
No.
This is what you have to look at.
Although a firm, I mean, SoFi last week, I don't know.
Well, I'm just saying that the choice of words here, that consumer risks are at or near an all-time high, it took my breath away, because I didn't think that's the case.
Let's get the opening bell here in the Real-Time Exchange, and the big board Explore and Decor, celebrating the opening of its first warehouse in Brooklyn, first warehouse store, and its fourth store. And to the NASDAQ, it's AI software company Zapata, celebrating its recent listing via SPAC. Jim, you talk about consumer risks. JP Morgan desk today says maybe we're in a, quote, virtuous circle where consumer demand means corporate margins are solid, which means layoffs are less likely, which means employment's good.
It means you're full crap.
It was very much up for grabs. Super quarter makes a high bar for us to get above those.
These guys don't get it.
5,300 was the range for the S&Ps that was.
We're outstandingly up tremendously, and they're still trying to pump this market. I can see us going down a lot. I mean, we're going to be good today, but
to a 4 handle, so I do think the 52 to 5,300 range
to the 200
tougher to grind through. So let's just chalk it up to that for now. Apple, green, sea of red. That's the high-quality defensive nature of Apple. We talked yesterday also about how Tuesday's session had quality stocks outperforming momentum. As we just heard from Mario Veneroso there, the kind of blue chip quality of Apple today with the big dividend does suggest a tinge more of
we got a 1, 2, 3,
like an NVIDIA-driven trade. So Apple is perfectly good gas for a market, but NVIDIA is nitrous.
Nitrous.
And we're missing it here. Tesla also back under some pressure following that big multi-week rally post-earnings.
And it has more than
Let's
that, the
talk some more
DOJ
reports.
picking on them.
We've got a lot this morning, and some fun ones with some pretty big moves. And the double-digit moves in Shopify are a highlight.
Shop getting slammed.
9% rally, and Rivian with an almost 9% drop. We already talked to Uber and Lyft. We'll get into some more details
3 blacks.
there later on in the show.
Big engulfing candlestick it open. So I'm going to jump in this trade right here.
Anheuser-Busch up almost 5%. Let's talk about that big Shopify drop, though. Renita Young's got the story for us. Right, take us through the numbers, Renita.
Yeah, not a lot of fun.
We got the
but definitely
9 cross
a
the
big
21.
drop of somewhere close to 18% this morning. It was the company's outlook for revenue that really has the bears
Almost
taking
a tweezer
control,
bottom.
as well as the company swinging to a net loss of $273 million.
Today's
the cost
the
of revenue rose to $904
May 9th.
million from $791 million from a year
Man,
ago.
look at that.
This company is
517.
forecasting the slowest quarterly revenue growth in 2 years. And it's all because of the uncertain macro conditions and
5 contracts.
tightening up on their spending. They're expecting second
might
quarter
get
revenue
10.
to grow at high teens percentage.
We got a double bottom.
That's below the estimate of 26%. And they're looking at
With a higher
operating
low.
expenses to rise by a low to mid single digit percentage rate versus a 4% fall that happened in the first 3 months of the year, or is expected to happen. Now, guidance of the full year is expected
Right
to
now,
be affected
137,
by the
the 516
Shopify
strike.
sale of the logistics business last year, and that's expected to create headwinds for both revenue and gross margin for the full year. And Shopify is also expecting gross margins to shrink by about 50 basis points in the second quarter. Otherwise, earnings and revenue, pretty good. Adjusted earnings rose about 19 cents
137
to 20 cents a share year over year. Revenue increased around 23% year over year to $1.86 billion. Gross merchandise volume, that's the total value of orders processed on the company's platform, was up around 23% to more than $60 billion. That was far above the expectation. And merchant solutions revenue was up about 20% to $1.4 billion.
137.
Revenue was up around 32% to $151 million. Shopify Plus contributed about 32% of that, which was roughly flat for Shopify Plus's contribution versus a year ago. So we can see just how the tight consumer is impacting this stock, which is, of course, highly exposed to the consumer.
Yeah, the miss on the outlook is not going to be well received for a company that we've become accustomed to show really kind of blistering growth, and especially when the question about the consumer kind of lingers here, and the Shopify competition is very much present and active, and we've seen kind of the ranking of these e-commerce trades where Etsy's kind of struggled, higher end, most discretionary. Shopify, you do kind of get to some of the smaller businesses, that do kind of overlap with somewhat of that kind of mom and pop, highly discretionary style of Etsy seller, and just still so far off from what was possible during COVID, especially with the economy shut down and so many people selling things online and out of their homes. And Shopify obviously has a lot of big clients too, which makes it different, but it's just still not an Amazon that has anything else to balance it out.
Exactly. I was going to say, and people forget that they still compete against Amazon.
Very much
Amazon's the largest, and a lot more small businesses have been able to sell on Amazon over the past couple of years since they kind of opened up the reins for that. So that's always going to be a
go, baby,
for Shopify and Etsy and other similar platforms.
200 SMA and get out.
Loss
take profit.
Be punished. And
when you're up like this, take some profit.
Okay. Because it was a big pop from the November earnings, and now we are in the process of winding that down. Last earnings too, it was a fade after, but it was still a big rally. So two very positive quarters.
156.
Reaction now kind of going the other way. So brutal here. Sell off intensity.
I got 6 of them. I wanted 5.
Right down 20% right now. Wow, getting wrecked. $61. So fresh little low there at the open bell. Caroline Woods joins us, taking a look at Reddit, Rivian, Aristonet. I was joking yesterday. I felt like just putting a bunch on the line for Rivian for no good reason. Caroline, I'm glad I didn't, because once again, they're getting toasted today.
Can't always trust your gut, Oliver, because your gut pointed to something good, and we're not necessarily seeing that with Rivian shares today. Shares are down about 9% after earnings disappointed. We know selling EVs hasn't been easy lately, especially some of those higher priced ones. Rivian's average about like $86,000 a vehicle or something like that. And this was a disappointing quarter because Rivian is no exception.
Oh, I didn't put the calls in there. Shit.
Challenges that posted a wider than expected loss. Did keep its forecast for production unchanged for the year despite this industry-wide slowdown that we're seeing. But not enough to keep investors happy. So the loss of $1.24 was wider than what analysts were expecting. They were expecting a loss of about $1.13. Meanwhile, revenue of $1.2 billion did top analyst expectations of $1.15 billion, unless you round up there. That's 82% higher than the year-ago period. Rivian made 13,980 vehicles in the first quarter. And looking ahead, it still expects to make 57,000 trucks, SUVs, and delivery vans in 2024. So basically, they'll have to make more than 14,000 vehicles every quarter for the rest of the year. So a little bit more than they reported in Q1. It also reaffirmed guidance for an adjusted loss of $2.7 billion for this year. Now, Rivian has been overhauling its Illinois factory to create its lower cost SUV instead of doing that after halting plants at their Georgia plant. So that is resulting in cost savings, and they did actually lower their CapEx guidance to $1.2 billion for 2024. Also expected the savings to have an impact in 2025 and 2026. So capital expenditures in 2025 will be about $1.5 billion. And looking ahead, Rivian said it's focused on continued demand generation, delivering cost and plant efficiency improvements, advancing the R2 development, that lower cost SUV, and driving towards profitability. Obviously, this is a company that's still operating at a loss. On that note, Rivian did say on the call, we expect to see meaningful improvement in our gross profit during the second half of this year, and we believe we will reach a positive gross
160
profit for the fourth quarter. That all being said, investors are punishing Rivian today. Shares down about 9%, still actually higher in May because it saw a nice pump heading into these results, but definitely a tough day for Rivian and a tough 2024. Shares down 60% year to date.
Okay.
Yeah, and keep bashing Tesla, you idiots.
Brutal, back under $10. Even with Amazon.
Tesla's the only company that's going to do it.
And their cars showing up.
No matter how much they hate it.
More and more on the road. They just still can't figure out, the profitability side. It's like, on the one hand, I want to give them credit for just kind of pushing forward on the production to keep the production running, but it's also kind of just like bashing your head against the wall. It's like you're just losing so much money on each car. I'm not sure what the game plan is other than
lower the cost so people can buy them, and your productivity will go up.
Streamline things, help them with cash,
and your profit will go up.
Just take their kind of blueprint and style and apply it to
it's simple math.
A wider fleet too. That's kind of what makes sense to me. License out their design at some point, something like that. Just I'm not sure that this company is going to stay in the form that it is right now.
Well, there were those rumors too about Rivian potentially partnering with Apple.
Exactly.
Haven't heard anything come of that yet, but let's see what happens there. I will say Bank of America reiterated Rivian as a buy after these results, saying Rivian is still right place, right time with right product strategy. So there's still some bullishness on the street for Rivian. As I said, shares have been hit hard in 2024, but
rising wedge.
It's now $16. I did see that Mizuho maintained its neutral rating on shares, but did lower its price target to $11 a share. So still higher than where it's trading right now, but definitely staying on the sidelines from Mizuho.
Okay, let's talk about some winners here. We got 3 winners. Reddit on its first earnings, a little bit of a pop here. Meme traders busy last quarter or what?
Yeah, well, we know Reddit is known for its loyal user base, and it reported 82.7 million daily active users for the period. That's an increase of 37% in terms of subscriber growth, so really relying on those loyal users. But yes, revenue surged 48% in the quarter to $243 million versus $212.8 million in the year-ago period. Ad revenue, of course, is what's in large part behind that. That was $222.7 million, up 39% year over year, and faster growth rates than many of its competitors. Average revenue per user worldwide rose 8% to $2.94 from $2.72 a year ago. But the bottom line, of course, this is an unprofitable company as well. Loss per share was $8.19. Now, for the current quarter, Reddit said it expects revenue of between $240 and $255 million. That's more than 30% growth at the midpoint, and that's ahead of what Wall Street was looking for at $224 million. Chief Executive Steve Huffman did talk about subscriber growth on the call, saying we feel confident looking forward because the growth that we've seen isn't a one-time spike. He said Reddit has added roughly 2 million subscribers per month for 7 of the last 10 months. So not just a one-time thing. Also sees a huge opportunity in international growth. So was talking about that on the call. Reddit share is up about 5% today on this debut report. In terms of
Carvana, did I say Rivian?
Piper Sandler stick with an overall rating, but hiked its price target to $65 a share. Needham's also a buy, raised its price target to $63 a share. Baird maintained a neutral rating, but raised its price target to $59 a share. So Reddit share is currently trading around $52. Just as a reminder, it IPO'd at $34. It rallied to $50 its first day of trading. It got as high as $65 a share in the first couple days of trading. So now it's obviously pared some of those gains, but trading up about 5% today, just below $52 a share.
All right, nice debut. You know, they got $29 million of free cash to figure out what to do with, so that seems pretty solid.
Wow, it's dropped some.
And a nice piece of fundamental information to build confidence.
All right, 710.
Kind of described as, you know, a highly volatile trade so far since its debut, which it generally has been. But okay, at least it's got some real numbers behind it, because we were kind of watching Reddit trade next to DJT and stuff, you know, and all the connection with the memes. And Reddit's, you know, been around for a long time. They've got a pretty good established financial kind of mousetrap here on how they make money through the website. So, and just a lot of loyalty to your point as well. Let's talk beer. Anheuser-Busch, little earnings beat. Improvements in the U.S., and this has been a very, very tough trade for those in alcohol because there was that the seltzer movement that then kind of backfired for the brands who went, you know, too gung-ho on it. So right now up 5%. That's a nice little bounce back.
The seltzer movement, but also the involvement with the transgender influencer Dylan Mulvaney back in April of last year, which caused all sorts of boycotts. And it seems like Bud Light sales are finally weighing less on results than they had been in the past. And comparisons should get easier after this quarter because that happened in early April of last year. But yes, this was a beat on both the top and bottom line. First quarter earnings, adjusted earnings per share of 75 cents, topped analyst expectations of 69 cents per share, revenue of $14.55 billion. Represented a rise of 2.6%. That also came in ahead of analyst expectations. Beer volumes in North America fell 9.9%. But when you compare that to the previous 2 quarters, there were declines of 17 and 15% slumps. So that's showing improvement as well. Revenue in North America did fall 8.8% to $3.59 billion. Due to declines
All right,
in US
go baby.
but also due to a drop in demand of Bud Light. Still analyst expectations of $3.53 billion.
Knock it out.
Also, if you
2,
take a
4,
look,
6,
North
8.
American
Oh, no,
sales
wow.
grew more than 9% from the fourth quarter, so seeing some sequential improvement, potentially an uptick in sentiment there. Global beer volume.
We just hit the
fell
200 SMA.
0.6%. That was less than the 1% drop that the company was expecting to see. So strong international sales, strength in brands like Stella, helping to kind of offset some of the weakness in Bud Light that Bud was seeing. Company CEO said the strength of the beer category, our diversified global footprint, and the continued momentum of our mega brands delivered another quarter of broad-based top and bottom line growth. So Anheuser-Busch InBev, AB InBev, shares up about 4.6% today on these results. Still lower year to date, down about 2% year to date, but chipping away at some of those losses.
Yeah, very real turnaround, right? Getting I guess the brand back in in vogue, or maybe just people have had time to get over it, whatever their personal problems were with their advertising. Because I mean, it did drop off pretty hard. We had a negative quarter last quarter, so back to growth is good, and it looks like analysts think they're going to pick it up a little bit into the still low to mid single digits. I mean, it's just still not a ton here, but at least the earnings are pretty reliable, and it does seem like the market thinks that they're kind of back as a popular brand again. We did also see, some pretty dramatic volatility around Molson Coors. So the fact that Bud's actually up here is definitely encouraging, because now they're kind of looking like a leader in the group, actually, because Tap is down near the lows, and Sam Adams is down near the lows too, Boston Beer. So I guess we got our winner in the group right now. Constellation, which has been okay, but still, kind of off the highs as well. So that's our kind of ranking. I think Bud's the best looking chart, frankly.
Bud.
Now that it's turning around. How about Aristonet? Let's talk some tech. Probably the most important company actually this morning, Caroline.
Well, shares of the cloud networking company are up about 4%. Clients, of course, include companies like Meta and Microsoft, so AI, very key to Aristonet. A lot of talk about that on the call, but this was a beat on both the top and bottom line. The company also boosted its outlook and announced a $1.2 billion stock buyback program, so that seems to be sending shares higher.
175.
Running through those numbers, EPS of $1.99. That was an
177.
was for $1.79.
79.
Revenue grew to $1.57 billion from $1.55 billion. That was a 2% revenue growth. Due to growing demand for AI networking solutions, that really helped to boost results. For the current quarter, the company said it expects net sales of between $1.62 and $1.65 billion. So sequential growth in the midpoint of that range is ahead of estimates. And the company also raised its 2024 revenue guidance from 10 to 12% growth to 12 to 14% growth, or about $6.6 billion. Seeing a lot of positive analyst reaction from this report. Wells Fargo raised its price target to $340 a share from $310, kept an overweight rating, says the stock move in Arista is justified after earnings given increased 2024 revenue guide, the AI opportunity confidence, and strong fundamentals and visibility. KeyBank hiked to $349 from $306. Kept an overweight rating on the shares. Meanwhile, just running through a few of the others.
Man, what a
Morgan's down
treat.
to $335. BNP Paribas is at $325. Barclays is at $320. There's several other price target hikes across the board for this one. Aristonet currently trading up 4% at $285 a share. So shares now up about 11% in May so far, and up more than 20% year to date. So this report definitely, beat on both top and bottom line. boosted outlook, share buyback. Can't really beat that.
Yeah, that's kind of what struck me yesterday. Just basically on every metric, it was a really solid report. And maybe an underappreciated winner is a beneficiary of all these clouds data center build outs around the new AI stuff and having to connect new wires and new network
What are you up on,
to the
Randy?
machines and big growth with it. So like 15%, right? 16%. So good stuff. Margins bumped up. I mean, everything. This is a really good report. So I can see why the analysts are loving it. Up 4.5%. All right, thanks, Caroline. Good stuff. When we come back, we got Uber, we got Lyft too. We're going to take a look at the earnings in some detail, do some trading on both as we've got a little bit of leadership shift this morning. Swap between Lyft and Uber, where Lyft is actually the outperformer.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. All so you can trade brilliantly.
I was born on the south side of Chicago. It has been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Non-discretionary inflation. This is the price pressures that U.S. households are seeing for the essentials in their budget. That's running at 4.7% year over year. It varies what we're seeing on what we call the discretionary side.
All right, a dramatic stat, one that definitely rings true after a couple weeks of soft data but sticky inflation. Don't miss Danielle DiMartino Booth's sit-down conversation with Caroline Woods, airing this week, 4:30 p.m. Eastern Time, 8 o'clock every day, 3:30 Central. That means after market on close. All right, let's talk some Uber and Lyft. Mr. Tom White here with me in studio is we've got a little role reversal here this morning. Tom, you think it's appropriate given the numbers?
I think if you look at where Lyft is now to where Uber was about a year ago, right?
Exactly.
Going into these results, Uber was up, 86% over the last 12 months, a little bit of a pullback. Now they're starting to buy it back up at this point. Those charges that they took over $700 million on investments that they've made in names like Didi.
I'm going to take profit here, I think. I'll wait. I'm going to stay above the 9 and the 200.
At that point, the CEO.
If we break below this trend line, I'll get out of the
those
stock.
Are gonna go away eventually. Some of those investment impairments that they took on that quarter, but ridership.
I'm trying to get as much as I can out of this. I really got to learn how to keep in these trades. And we're so far sold off this morning, we can pull back. But if we hold the 9 and we stay in this channel, this would be my stop loss, would be under the 200. And Boeing's screwed up again, huh? Okay, we've got a bear flag. Shooting star. That's a shooting star. It's a thin doji, but it's got the long leg on the top. It's a long leg doji. Oh, I don't want to put that in there. That was a great opportunity this morning on that snake. Well, that's pretty good done. I'm ready to go to the beach. What was that trade you're up on $800 on? CLSK? Randy. Very good. What'd you call, put, or did you get in the call? You must have bought a shitload of it. We hit the 200. 3 black crows. Wow, what a good trade. Perfect. Oh, okay, that makes sense. Big guy here. Nice trade. Did you notice the 3 black crows on the 1 minute? An ascending triangle. I mean, that's beautiful setup. Higher lows, 3 black crows, and bam, to the 200. I mean, perfect. You saw the crows? Good. And Nets pulled back to the support channel. Then we got shop. And then we got Uber sucked. So we hit the bottom of my channel, but I ain't, nah, I'll wait. I'll wait 3 days after Uber. The earnings sucked. Let's see if it's my phone. Okay, hurry up. Everything's delaying me today, and I don't like it. I had to look for my password on Twitter. I put a new password in it. I couldn't figure it out. I mean, that was a tough one. Meta popping. 185. Maybe suckers went to 198. Everybody hear me okay? So 200 will become, and VWAP now becomes our support just like clockwork. You have a rising wedge breakout, which is bullish. If we stay above the 200, we're still bullish. And I'm totally out. And I'm going to go through my watch list and I'm going to show you how I trade it. So I come in here and I look at the red and I see what's down. I got, what's U in here for? What'd I put U? Unity software. I don't know why I got that in here. Good job, Randy. Mike probably made a ton of money too on that. He's been alerting that. Mike, great job keeping update on that. If you're in here. Hello, good morning, Johnny. I'm going to take you off here. I don't know why I got it. It's definitely pulling back, so I'm going to take it off. I don't know why I got it on here. It shouldn't be on my list. DOJ again. You know, I don't understand. I talked about this last week. DOJ after them because they promised something that they couldn't deliver yet. I mean, I'm about fed up with this government. GME, this was pumped yesterday. Morgan Stanley, Lulu, Apple. Apple's got a double bottom. We're working on it. Lilly, it's a good call yesterday off the 200. It needs to come down. QQQ, I would have probably took that this morning. Disney getting pumped again at the bottom. A guy ridiculously was pumping this thing this morning. And I'm saying no. AMC, Netflix, Meta in here. Nice, nice. Someone said an alert off the 200 for the SPY. I think we could come back down here and hit this trend line really and get back in the trade. I just got it off these two candles. You know, I don't know how sturdy it is. I mean, you're only talking 2 minutes here. Carvana, I want the 50% retracement before I get out of it. I don't see how they can pump this thing up like they are with that news. Oh, wow. Oh, man. I love this SPX deal here. I wish I could have saw this morning. I'd have took this trade in a heartbeat. Oh, man, I wish I saw that. I didn't even look at it. I just traded to SPY. But this SPX setup. I mean, magnificento. The puts would have paid. God. Remove. Man. 1 Tibbets and a freebie. Mm-mm. I mean, damn, that was a nice, sweet trade there. That would have been perfect. Yeah, that's a beautiful chart. They were pumping Boeing yesterday. I wonder how that sucker's looking today. Unbelievable. I mean, they do believe this is at a bottom. I mean, this is scalping material. Lyft had to downgrade yesterday. Bad earnings. Now look at it. I doubt if I'm up on this. Yep, I'm not up. Well, Comcast is up. A net, that was a beautiful trade, my friend. D-Dog, here's another good one. Just took a pretty good hit off earnings. What was Apple's still holding a double bottom. Bud. Bud had earnings improvement. They were pumping it this morning. Well, it's been since April of 2023 when the Dylan Mulvaney freak. I don't think I've ever been so insulted in my life. Can you imagine putting a Bud Light in your mouth? Knowing that it could be a penis? We bounced off last earnings. I mean, 3 times ago. That's a good looking setup right there. It has to break to 63 on the daily, which it did. So it'll probably come back down here. I'll put an alert just in case. And I'll raise it up just a little bit to the top of that wick. Make it 60 something above 61. Okay, I'll take that trade when it comes time, but I won't tell nobody, especially my best friends. You traded baby. We're still holding the 9 on the daily for Tesla. No, we're not. We're at the 50. Crocs. I was looking at Lulu and I thought of Crocs. Where's Spy? Spy's not on my list. I love the Spy. We have a golden cross. Off the 200, Jimmy called it. Tell you what, man, this is a killer. People are too scared to trade this. I'm killing it. It's perfect. They don't get no better than that. YouTube, did y'all see that trade? SMCI new highs. Tesla calls off the snake. Now you know Tesla's getting smothered with gravy here from the DOJ. So okay, I'm going to tell you how I trade Tesla. I've been trading it quite a long time. And I've always been the devil's advocate of all these idiots that have always bashed it. And I mean, it was getting bashed, and I got in at 150 and run the sucker all the way to 2200, getting bashed all the way up. That was when people said, I ain't gonna buy no electric car. And then it's just been a non-stop game. I don't think they've ever said anything positive about Tesla, ever. It's like Trump. Trump's the people's president, and Biden is the corporate president. But they'll tell you, different. I've never seen so much money printed for the 1% that I've ever seen in my whole entire life in the past 4 years. So Tesla, now they got the DOJ after them, and they'll beat this. I explained business. Anybody knows business, things don't go always as planned. There's always things that can get in the way, like COVID, the government. I'd be almost too scared to go autonomous or anonymous or whatever you call it, because I think it should be the responsibility should be the driver. You don't know what's going to jump out in front of you, or like this morning, I'm driving down the road and it's dark and there's a little bitty rabbit. There was a car in front of me, so I sat there and watched that car. And I seen the rabbit after the car passed, so I swerved to the left. I didn't want to hit the rabbit. You know how the rabbit crosses the road? He gets out of the way of Washboardjim. So when I darted to the left, he darted to the right. So I've got the 3-line VWAP, and we hit it here, and we hit it here, and we got another inverted hammer, which is a bear flag, but I don't know. We got a couple dojis here that could raise this thing back up. That's a spinning top. Spinning top. Spinning top candlestick pattern indicating indecision about the future direction of an asset. So it doesn't know where it wants to go. It's thinking about a move, and then you got to watch the candle behind it, and that'll tell you which direction it should go. You know, like when I get 3 black crows, maybe 3 big old red candles, and I see a spinning top, I want to look at that next candle. And the body of that candle holds the body of this one. That's a tweezer bottom, and that'll go up. Same thing right here. You got the spinning top, you got a tweezer top, and it goes down. Tweezer top is the 2 bodies of the candle lining up together. Bearish, tweezer top, bullish. See, that's doji. Stayed in the body, which means it still can hold support. We have indecisiveness, and we have a little bit more there's some indecisiveness. This looks bearish because of that wick is bigger than that one, and we did pull back. So I'm not taking a trade yet. I'll wait. Better shop. God, shop just got slaughtered. Now they were pumping shop, and I was a little leery of this. Hey, Paula. La 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 la. So shop, we got a resistance at 308, right shoulder line, the second one on an inverse head and shoulders shop. Come on down. How's Johnny doing today? What do you think of Wing? Where's Mike at? Why ain't he on voice? Spank. Oh gosh. Oh man, I'm thinking irrational exuberance. Oh God. Ugh. Oh. Wow. I think it's would kill or run. Then I started singing. I don't remember singing, but that was enough. That's funny. I don't know why he just doesn't understand opera. I was an opera singer. I sing rap, I sing classical, I sing rock and roll. I sing boogie oogie, I sing hillbilly. That is CLSK on rebound. Get back on voice. Mara. SMCI. Woo! I didn't even think about this trade today. It was perfect setup. One of its tubus and a freebie. I mean, look at this. Man, oh man. I could, one line. One line's all it takes. And I'd have took this trade, and I'll show you here. Boing. Wombats Tubis freebie. One two bits. So it don't look like much of a falling wedge, but it is. You know, that is kind of thinning out here. So I'm coming in here and I'm looking at a 1-2 freebie. I would have took this trade in a heartbeat. When we when we have such a hard pullback pre-market in the SPY, I mean, that was just like my mouth started to water. It was that delicious. I mean, I would have took this trade. I would have come in this morning. I'd have said, hey, if we break the 200 on the 1-2 free, I'm going to jump in this trade. Or I would have said, double bottom, breakout, pull back, boom. Then I seen these 3 white soldiers. I would have took that trade right at the 200. I would have took that trade, because then you have your 1-2-3 right here off that 3rd soldier. So yeah, I would have took that trade, and I would have probably held on to it. I would have got a little bit scared here. I would have got a little nervous here because we have a 1-2-3 and a lower low. And I would have probably, I don't know, I probably would have got a little shook up there and sold it. Maybe. Depends on how much I was up. Remember when you have a hard sell-off like that, and I talked about the weekly, look at this baby. Man alive, we're going to the next one. Man alive. They're at 256. 256. May give me 300. Give me $3 a contract now. Jimmy said he'd get back in it. We hit the 200. We had the 50 cross over the 200. Can anybody tell me what that means? What happens when the 50 SMA crosses the 200 SMA? YouTube, what is it called? I'm your teacher. What is it called when the 50 SMA crosses the 200 SMA? I'll give you a clue. It starts with a G. And it's worth a lot of money. Golden Cross. You got it right. What is a Golden Cross? It's when the 50-day moving average crosses the 200. Now, they use it on the scale of the daily and the weekly time frame. But as a scalper, I use it as the 1 minute. And I'm going to show you a trick. You ready for this? Well, it didn't work out like I thought. I thought we were going to have the 200 cross above the VWAP. So here's that rising wedge. This is an exit idea. So SPY hit my resistance channel to break. 1, 2, 3, 4. 1, 2, 3, 4. Golden Cross. I'm out of the SPY right now. 137 to 152. I just love this. I'm getting so good. I mean, I'm not going to say I'm getting good at it because it might just be market conditions that can make you a better trader sometimes. You know what I mean, don't you? By market conditions can make you a better trader. And being ambidextrous when it comes to trading. Think with your right mind and your left mind. Just think about it. We're yesterday's close, okay, 517.75. Resistance channel to break. So I charted this first thing this morning, and I had a triple bottom support, and I was going to take that trade. I said on YouTube, I said, hey man, I wish the market was open right now. I'd take this trade. And if I would have took that trade, it would have been a big mistake. So when it opened up, and we jumped out of this snake, we had an inverse head and shoulders. And that was the key metric, because inverse head and shoulders is bullish. You got the head, and that thing pulled back and created an inverse head and shoulders. What was that? Oh. We got someone on mic. Max Boof. Your mic's on. I got you. You should still be able to listen to me. I thought that was Mike again. Going to yabba dabba doo. So I got out. I got out at the resistance. I already knew where I wanted to get out at. So if I got in that channel of resistance, and you know, it's been an hour in the trade, you got an inverse head and shoulders. You got your left shoulder, you have your head and your right shoulder. So we come down here at the bottom, we break out of the channel, we create a wedge. I say always look for the pattern. And I got out of the trade. I scaled it out. I still had a few left. Then we came back and hit the 200, and I added what I scaled out back into it. The 200 SMA, and I said this, and at that point, I said this is looking good and clean. There's days where charts ain't going to look as clean and healthy as it pulls back to the 200 on the 1 minute. So that looked real clean to me, rising, straight up rising wedge. Squeezed out, got out, scaled out, bought back in the 200, and then we just went ahead and finished that wedge. That resistance, this resistance on the wedge hit once, hit twice. So that was my exit idea. That's a resistance level on top of that pattern that started from this candle to that top, and I just extended it out. You know, I didn't average it from here to here. I went straight to the first candle, same right here, and then I completed my wedge and got out of the trade, pulled back. Then you had the golden cross. You had it bounce off the 200. And then you got these candles. This is an inverted hammer, abiding with that body there, and then you've got this spinning top. And that respected that again, and then you had a dragonfly doji. She went ahead and flew on up. It's always them candles you got to pay attention to right out of the gate. So we hit the 200, we had a golden cross, we bounced off the 63, we had these bullish candles, and then that engulfing flame, and then boom, I respected the 9. So it's beautiful, beautiful chart. Inverse head and shoulders. This is a bull flag. Snake breakout, pulled back to the 200, double top out of the trade. Falling wedge. No? I don't know what that is. So I probably wouldn't have took that trade until we come back and hit the 200 and scaled out at the double top. Unless I see something here. 1, 2, 3. I might would have took that trade. Yeah, I would have took that trade. Inverse head and shoulders. Yeah, I'd have took this trade. So you got it yesterday. Yesterday we bounced off an inverse head and shoulders. And symmetrical flag. 1, 2, 3, boom. And then this morning come in and see us bounce off that right shoulder line. I would have took that trade too. Now we got a 1, 2, 3 top, so I'm going to short this baby. The 517 strike at 111. We got a megaphone. I should have probably took the SPX. That would have been more money. Yeah, that's been a better deal. This is a descending flag. One tubus and a freebie. 1, 2, 3. We broke out of the flag, so this could be short-lived. We're at 118 on the put. 111 to 118. I want a few more cents here, if I had any sense at all. $5.17. There we go. Got it. 10 cents. Out at 121. So in 3 minutes, 2 minutes, I made $100. Spy put. 1, 2, 3. Easy as A, B. Oh, I'm singing again. Stop it. I want to leave Mike on here. That's funny. You see what we did, right? 1, 2, 3, get out of trade. Now we got a head and shoulders. You got left shoulder, and a right shoulder here. So if we hit the shoulder line, it should go ahead and drop down to the VWAP. So I could have scaled out maybe, but now we got CLSK. I'm going to add Mara. Means these suckers are back in play. I got a 2028 target for Mara. Uh-oh, we might have done something already here. We're at the 50 SMA on the daily. Mara, Mike. We break that, we'll go higher. If not, we'll pull back. We did break out of it once, twice, and I think we still can. And then you got a triple top. Pivot point at 2246. If we break that, 2246. You see that? And we got a gap, resistance. Yeah. Jimmy said would fail this flag, but it's a bull flag. Now we're on the 51. YouTubers, this is an old moving average that I used to use right here. It's called the 51 EMA. I'm going to put the 64 over here. Let's see if that's the right one. VWAP The 200 and the 9. I'm going to change it to 63, or I'm going to add a 63. So this is the 63 right here. I really like this 63 to hold it up before you get to the VWAP and move it back up to the upside here. YouTubers, I just added the 63 EMA to my VWAP chart. I have the 200 only and the 63. So first, second, and third support. Oh, shop and Spotify. Yes, I'm adding Spot to the watch list. So when I come in the morning, this is how I do it. This strategy's worked for a very long time. Is I create a watch list of what I think this is. I'm calling this the bubble. It's Tony and Jim bubble watch list. And I'll look at the volume highs, the ones that break. Then I go over to the percentage and I want to see which ones are getting hurt. I might see something in here I like that's just having a small little correction off something. Then I'll go to the breakers. Because I like catching knives, I go to that red one first. Because this watch list is real good. You know, like I could see NVIDIA dropping first thing this morning. We got Mara. So if I'd have come in this morning and saw Mara, we've got 3 black crows. Mike traded, Randy traded it. Oh, they traded, Mike traded this. But if I'd have saw them crows and I seen the falling wedge, I'd have took that trade in a heartbeat. In a heartbeat. It wouldn't have scared me one bit to take that trade. And I get a knock on the door. Hey Mike, how you doing? Yeah. What? Hey Mike, what about that call you made this morning, that wedge, man? You shot it out them 3 black crows first thing this morning. I had another one right here with a tweezer top, and then we had this fallen wedge, and I get that knock on the door. Jim!
I'm the best chance you've got.
This is the best chance you got to take this trade. So we break out of the wedge with an inverted hammer. And then the 9 crosses the 21 and respectfully engages in the 21. And we take it to the 63. I get another knock on the door, and we got a double bottom. And we run it. And then we run it up to the 200 SMA and get out of the trade. Successful trade. 3 black crows, fallen wedge to the 63, pulls back, double bottom, another wedge here. On the minute. If you can count to 3, you can trade with me. That's right. There's your wedge. Then you got your 3 white soldiers breaking out of the wedge. I would have probably stayed in that trade forever. Or at least run it up. 3 black crows, fallen wedge to the 63, another fallen wedge leading out with 3 white soldiers. Boom. To a head and shoulders. And got out of the trade. That was nice. Yep, that's beautiful. SMCI, NVIDIA, NVDA is my go-to trade, and SMCI. Oh, here, look, I just missed it. I just missed a trade. Disney, Uber, Starbucks, and McDonald's send a powerful signal to investors. Oh, really? What is the signal? Where'd it go? The daily night clean defaults, RSI delay. Disney earnings were good. The reason the stock took a hit, Disney projects operating income for the experience segment consists of spark to show growth. Theme parks. Oh, there's another theme park that's opening up in Florida. And I think it's Comcast or somebody's opening up some other theme park. McDonald's showed flat and declining trends. Starbucks earnings sucked. TSN fell after reporting. This is Tyson's Food. That says the consumer is pulling back. Well, let me tell you something. When my chicken goes from $12 for 5 chicken half breasts to $32, I ain't going to buy the shit. I'll find something else to eat. So I go back into the store the other day. Hamburger was like a couple pounds for $15, 2 pounds and a half. And now it's dropped down to under 10, 8. In a week. So what's the powerful signal? That we're at a crossroads? Exuberance over AI. I said that months ago. Fed second blunder. Powell's stance, when the data does not justify it, is to help the Biden re-election. Trump has already stated that he will not reappoint Powell. Good. Because Powell has been behind the curve. Him and smelling yelling. We got to have somebody that can be ahead of the curve. Like me. I'd take care of business. API crude. Okay, that's all I need to know. I gotta clean this up. I can't read it. Now I can. Someone said an alert for NVIDIA off the 1234 off the 200 SMA on the 1 hour time frame. Yep, I'm gonna stick with it. I'll wait for the pullback and catch it at 860. That's too much. Oh, that'd be. Oh, I see where I gotta put it. Right there. I gotta put it on the body of that candle. Yeah, perfect. See this peak right here? Here's neckline. You got an inverse head and shoulders off the 200 SMA. So this thing can easily come back down and hit that 200 SMA. Then you got a neckline that goes from right there to right there. So that's my second support at 834. This is the neckline. That's your head and shoulders. Inverse head and shoulders. And it all goes right into that. So I'm going to raise this up just a little bit. So I can get it before 840. Not a $50 drop. It can hold to 63 and move on up, but I think we've had a good little run here and it needs to consolidate. And it could stop right here. That previous high. That's a triple top breakout. 1 bits, 2 bits, and a freebie. And SMCI is one of our favorites. Then we'll go cook me lunch. What did I put in the video in here? Okay, you see this here, trend line, and that? We're going to find resistance. Resistance, 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 support, 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 support. So as long as we stay above this line, we're bullish. Then we got a 1, 2, 3 right here. So if we break 850, we'll go higher. If not, we'll pull back down to the 200. 1, 2, 3. 1, 2. Inverse head and shoulders with a two-headed snake. The whales. I think I need to put something under my arms. Phew. Financial giants made conspicuous bullish move. 15 unusual trades. Delving into the details, we found 46% of the traders are bullish, while 46% are bearish. So where's the other 8% lie? Independent? And SMCI at the 61% pullback. Look for the biggest puts. So we got to put. Man, that ain't much money. Next story is expected to be released in 3 months. Starbucks woke. Starbucks is starting to make a move. We got to break to 63 though. Not good until then. If you have any kind of news, McDonald's sends a powerful signal. I already read that. Yeah, 63 is resistance right here. And then we got Tilray. Hillary's pulled back to the 200. Now I'm going to go back and look at the SPY. I had to get away from it. Oh, Jimmy. We hit the right shoulder. I think it's going to come back down to the VWAP. So there's your head and shoulders. Stop here and come back down and hit this right shoulder here. Then we'll have two shoulders. Let's look at the put real fast on the SPX. I'm not ready. It says it's ready, but I'm not. This is a two-headed snake. So you got a head here and a head here. You got your left shoulder, and your right shoulder. If it breaks, it'll come up here automatically. If it doesn't, we'll come back down to a 1, 2, 3. I can buy the puts, and I didn't do it. SPX. the 5,200 calls on the SPX. Let me see here. I got a better idea. Straddle. We'll go in the kitchen and get something to eat.
Nothing for you.
Iron Condor. This is Iron Condor. At 310. And that's a butterfly. Now that's jumping around big. It's bounced up and hit that right shoulder. Squeezing between the 200 and the right. AMD's got a double bottom. AMD got a double bottom. Inverse head and shoulders. I mean, you can't tell, but it's 1, 2, 3. So AMD's setting up. Snake. If the 9 crosses the 21, or we break the 21, it's a shot to try to break this here death wish. If the 50 crosses down over the 200. And that might be the SMA 20. That's a simple moving average. I got to change these around. It needs to be an EMA. Yeah. Okay, let's turn back to TV and I'm gonna go cook. Oh, my girl's on.
500 closely, some of the beat rates on earnings, for example, and anything else you might want to add in. We saw the VIX, for example, in this one about 15, and today back to that 13 level. Final thoughts on this part of this?
No, I think that's a great point relative to earnings. I think what we're seeing is showing that strength and resilience in the economy and backs up sort of the notion that our clients aren't completely pulling back, but rather paring their portfolios. So I think that's a great example of where, historically there's been a question of how smart the retail money is, but based on everything we saw in April and we're starting to see in May, seems like the retail money is being quite smart right now.
How do you question us retail traders? Who is this guy? Schwab Trading. I'm going to give you a jerk. You finally accept that we're smart?
Integration of just putting the platforms together. We're nearing the end of this, aren't we, James?
We are, Nicole. I mean, a 4.5-year journey is quite a long time, and we've spent over right at $1.5 billion to ensure we did this right. both the conversion for clients and the experience that they would have when
that was a good shot with his mouth open.
We've moved a little over 15 million accounts. We've moved over 1.6 trillion in assets, and that's sort of 90% of the clients at this point. And so we're gearing up for our final transition this weekend, where we'll move the final about 1.8 million accounts and 330 million in assets. And so it has been a long time, but that's because we've been really focusing on giving the best possible experiences for our clients in every transition along the way, and absolutely committed to doing that here with the final one.
I'm sure at the end of 2019, when people started to hear about this, they said, what, my TD Ameritrade account is going to go to Schwab, and there's probably that moment where you have some anxiety, but you did this in phases, very carefully throughout this time. This was an all-stock deal, $26 billion. It came at a 17% premium, and as you noted, has really begun at the end of that year into 2020, and has been done slowly and surely. In the meantime, what was the sort of the backstory of why this would work, the strategy? Because there's so much to offer, even more so now when you put them together. You have the Thinkorswim platform now that people are using, all the world-class trading experiences, investing, education. I mean, touch on any of these about how this now works.
Yeah, what a great question. The way it works is bringing the platinum standard of trading, right? Schwab Trading powered by Ameritrade is made up of the Thinkorswim platform at the epicenter, and we listen to clients all the time, and one of the things I heard the loudest and the clearest was, please don't screw anything up with my Thinkorswim platform. A lot of our clients are using the platform to watch us right now on the network. And so a quick confirmation, the Thinkorswim platform and ecosystem, your fantastic service, your ability to watch the network and access all of our education, all of that will be completely available, is completely available at Schwab today, and will be available for the converting clients here starting on Monday. And so the real excitement then is once we're finished with the integration now, how do we offer the best possible product array, the best possible service array, the best platforms to our combined client base, and bringing the TD Ameritrade Platinum standard of trading to the Schwab client base, and then also availing Schwab products and services to the converted Ameritrade clients, we think is an absolute home run. And we've seen it in the data, where once clients get over to Schwab, there's obviously a little bit of dip in satisfaction and engagement as they learn about new platforms, and that's to be expected. But we continue to see fantastic quarter-over-quarter, month-over-month increases in their engagement, their satisfaction, and their usage of Schwab products, which tells us there's a little bit of a learning curve, but once you get over here, it's a truly great experience.
Yeah, and so as you noted, some of the most complex trading accounts will be moved over this weekend, on this Mother's Day weekend. But in the meantime, listening to the customers, understanding from both the TD Ameritrade and Schwab customers, and putting the best features and functions together and making them available. So I would say, you know, with so many branches, and I look at it and I see 24/7 for people that they can chat and ask questions, and it's just the availability and the experience and the legacy that's so highly respected. But I think the seriousness in which this was taken to so carefully execute this, because I've been here, right? I came on board and it just sort of took off shortly after I arrived. And so I've watched it with my own eyes. And I too have said, don't screw up my Thinkorswim. And I'm just, you know, the anchor here. But, you know, the final thought here is this is it. You know, 24/7, so many branches. James?
Thank you so much, Nicole. Yeah, I would just add, we really have been listening for your client feedback throughout the integration. And we've introduced not only the Thinkorswim ecosystem, but multiple enhancements to Schwab.com and Schwab Mobile to deliver the best of both Ameritrade and Schwab. And we were committed to that. And we feel once our clients convert and get a chance to experience the new Schwab, they're really going to love it. And we're super excited about that.
Yeah, almost.
GME.
All right, good
Jimmy
luck
called
this
it.
weekend. I'm sure it will go swimmingly, smoothly. Thank you for the time and the explanation of how this has gone over the last several years since 2019. James Kostulias, thank you so much. Head of Trading Services, and we appreciate your time. Charles Schwab. Coming up next, disruptors. George Stillis is standing by. He has his eye on Arista Networks after its earnings report. He'll look at why this stock is moving higher and break down some of the numbers for us. He will also give us an example trade next.
Come on, you dingbat.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest
I'm sick
earnings
of this.
coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern.
I would love to be a good
anytime,
typer.
Anywhere on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Pedalides, live on the floor of the New York Stock Exchange to look at developing stories today. Caroline Woods is with us, senior markets correspondent here on Schwab Network, taking a look at the move we're seeing in Uber today after its quarterly report. Some of your thoughts there, Caroline.
Yeah, we're taking a look. Shares getting punished after that surprise loss, moving in the opposite direction as its smaller rival Lyft. Lyft shares are up more than 8% right now. Uber shares down more than 8%, almost 9% right now. I mentioned the surprise loss per share of 32 cents. The expectation was for earnings of 23 cents. Now, the loss had to do with unrealized losses related to equity investments, so not anything that had to do with Uber's operational performance, but investors aren't looking past that. Meanwhile, revenue did grow 15% to $10.13 billion. That was a slightly ahead of analyst expectations of $10.11 billion. Gross bookings, which of course is a key metric for Uber, those increased 20% to $37.65 billion. Wall Street was actually looking for a little bit more on that front, so disappointment there. Breaking it down by mobility, gross bookings came in 25% higher year over year. Delivery saw gross bookings rise 18% year over year. For the mobility segment revenue, that rose 30% and came in above expectations. The delivery segment saw revenue up 4% from the year-ago period, but that was below analyst expectations, actually. And then the freight business saw its revenue
AMD's got a head, inverse head and shoulders.
Uber's monthly active platform consumers reached 149 million in the first quarter. That was up 15%. And there were 2.6 billion trips completed on the platform during the period. That was up 21% year over year. Looking ahead to the second quarter, Uber expects to report gross bookings between $38.75 and $40.25 billion. The estimate on Wall Street was for $40 billion, so definitely at the high end of that range. And Uber is forecasting adjusted EBITDA of $1.45 to $1.53 billion, compared with $1.49 expected by analysts. So in line there. Derek Khosrowshahi said demand for Uber remains robust across its platform, supported by improving marketplace experience, the continued shift of consumer spending from goods to services, and the secular trends towards on-demand transportation and delivery. And it's interesting, I saw him in an interview this morning, he's not seeing the pullback in the consumer that so many other companies are talking about, saying they're not trading down when they order food, and they're not taking fewer rides despite trying to cut back on expenses. So interesting kind of notes about the consumer there. But shares down 8.8%, still up 68% over the past 1 year. taking a big hit today.
Understood. All right. Thank you for that. And seeing those monthly active users on the rise, to your point. People are still getting their rides in. Thank you, Caroline Woods. Appreciate it. Let's look at the disruptors because George Sillis is with us, senior markets correspondent here with today's company, and that is Arista Networks. In fact, it's moving higher, had the earnings, some good guidance. Break it down for us here, George. What stood out to you?
Well, I mean, overall, it was a really good quarter. I think there was, some concerns going into this earnings announcement in terms of potential slowdown in data center and AI spending from an infrastructure standpoint, particularly from companies like Google and Meta Platforms, which are major customers of Arista's, technologies and network gear. But also, what's so nice about AristaNet is they've actually started deploying and selling more software-defined networking solutions. So they're becoming more integrated, hardware and software, much like Cisco systems. And overall, the company's profitability in the last, year versus its 5-year average has actually increased by about 500 basis points. But if you look at the quarter, it was actually really good from the standpoint of earnings. They came in to about 25 cents higher than the estimate at $1.99. And that's about 39% earnings growth year over year compared to the same quarter last year. And sales were higher by 16%, beating the estimate slightly to $1.57 billion. They raised guidance slightly for next quarter. And the other thing is they initiated a share buyback of about $1.2 billion, which is approximately about 2% of the total float of $85 billion for the company. And with that said, there were some concerns, like I said, going into this quarter for a potential signal of a slowdown in spending from their network gear and, of course, software-defined solutions, but it doesn't seem to be the case. And some of the analysts are still constructively bullish. Wells Fargo's got a $340 target. If you look at yesterday, Jefferies actually upgraded the stock to $320.
SPY, I went 5, went 630. Now, AMD, I just charted here.
$40 target on this name. So I think they're basically telling us that maybe the stock is near full valuation.
I'll tell you what I saw.
It's trading around 30 times forward earnings, and that's typically where it's 5
I got to support at 152.81 to hold.
Understood.
That'd be the right
the trade
touch.
here, because you're already seeing
Let me
the
mute this a second.
reaction here with it up 7.5%.
Yeah.
So we got AMD here, and we had this little ascending triangle breakout at open, and we counted to 3 and we pulled back. And then we had the snake, and we developed the inverse head and shoulders, which is bullish. But I think we were going to pull back, and we are, to this double bottom and hold this here support level off this ascending triangle. Does that make any sense to y'all? So we got a confirmation of this trend line, which is a 1, 2, 3. And we dip down there and hit it once. And that's a double bottom. And we're going to take this trade. Now, let me look at one other. This 152.81 holds, then I think we'll shoot up to the 200 by the end of the day and maybe break it and run up to 154.50. How do I find that? Because it's a triple bottom. So we draw the line, trend line to the triple bottom, and that's your resistance level to break. So we bounce up here. Exit idea right here. Why does everybody say we're in an AI bubble when we were in a bubble 3 months ago, 4 months ago, when the stocks were at an all-time high? Why do they say it now? Why are they always late? You know why? Because they set stop losses. They want to ride it up as much as they can pump it, CNBC. I'm telling you, NVIDIA is going to 1100 yesterday. Then today we hear that AI is in a bubble. People are nuts. SPY moving up. I did I should. IWM is above the 200 SMA. And I'm going to go make me a bologna sandwich. I got the good stuff. Does anybody know how to count to 3? SPX came to me.
Count to 3 and trade with me, but count to 4 to make much more.
Make much more. SPX, Randy. It's got to break the 200. If not, we're going to drop some more. And I see it right here. I see it. I see it. Sport channel. You can do it. Yep. 51.91. Triple top. Okay, SPX. Let's scalp this baby. $51.91. Get 3 of them. So I've got the May 8th. I'm getting the May 8th. SPX calls May 8th. I'm not in them yet. Might count to 4 and make a little more. $63 support resistance. Alert at VWAP. And SPY. Oh, 310. That's cheap. Let's see if I can... Oh my, I might get this at 270. This is the 5100 strike. Oh, the SPX. Rodney, I'm about to make a business decision. One, two, three. 1, 2, 3, 4. This is the sweet spot. I want 310. I grab one here and two more if we hit 310, or I can wait for 310, the 5190 lotto for today. So we just wait. F. There we go. Come on. Patience. I could have got 320 and I almost did it. I'm gonna see if I get 310. I better get in the sucker. I'm gonna regret not getting in it. 340. Break the 200. SPY on the 3-minute. Break it. Break the 200. $4, baby. Washboardjim. Washboardjim. Who knows Washboardjim? $3.90. $4. Blanket. I'm gonna do the shimmy. Let's break it. Stay above the 63, YouTubers. That keeps us in the trade. If we get a nice little lick right here, this is the sweet spot. In any flag or any pattern, there's a sweet spot. And if you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. But that's it, you know. We have to maintain, for it to be really nice and bullish, we have to maintain number 4 off the 200. It's that time of the day, you know, where I should be making me a sandwich.
Nothing for you.
I mean, any second we're going to do something. That's the sweet spot. It has to, and it broke out. Now we're retesting. This is when I tell people to start thinking about the trade. To get into the trade. We have the breakout and the pullback. Now the only thing left to do is to shoot up. It can hit this trend line. I mean, we can go down one more candle and hit this trend line. That can happen. But if we maintain the 21, which I think is the SMA here, I got to change. For right now, we're using the SMA. Let's see what the EMA says. The EMA we have to break. So if we break the EMA 21 and the SMA was a support level, so the EMA, let me see where that EMA was again. The 21 EMA, I'll change that a different color because I want to see where we are in perspective of the SMA. 5184. I'll change that to a different color so I see where we are here on the. That's a, oh, that's a 3 minute. You dip. Damn it. Same spot. Let me get it on the other chart here. Dadgummit. Man, it's so tight in here. Me. 5185. 5185. If we can break his 200. That's inverted hammer, pull back to the breakout, pull back, engulfing candle to 1, 2, 3. I hate to leave this trade right now. got an inverted hammer here. La 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 la. Break it. The time of the day means everything. I should have went and made my lunch. Uh-oh. Shoot. Stop it. Spank. Oh, come on now. Break. Break it. Break it. Just get a little mustard to get above that 200 and we're off to the races. I think we just got us some gamma there. Implied volatility at 1381. I'll be right back. I have my phone with me in case I have to get out of this thing. I gotta get something in my tummy. I'm going to show a trick, YouTube. I don't talk about this trade strategy, but I have now just put in a fake, F-A-K-E, sell. So when I put a fake sell in, that means it's going to bing. I love you. Did I ever tell you? I thought the dragonfly candlestick is the most prettiest thing I've ever smelt. That guy on Silence of the Lamb. I know it sounds creepy, don't it? Yes, I'm on it, baby. Been calling it out. Break it. It's hurting. Oh yeah. I should have grabbed more at $3. I'd probably get out of this trade by now. Randy. Huh? I did it again. Bingo, baby. Boom. Nailed it. Nailed it. Trick or treat. $4, $60 a contract. Jimmy called AMD. Whoop. Oh shit, I'm in the wrong room. Mara's bounced off the 200 SMA 3 separate times. Randy got out at $4. Now I'm gonna go make my sandwich because all I'm thinking about is food. So let's talk about this trade, YouTube. This is a fallen wedge. It don't look like much of a fallen wedge, but you got lower lows on the 1, 2, 3. So this is like I said, if you can count to 3, you can trade with me. And if you can count to 4, you just might make a little bit more. So I jumped in it at number 3, and it pulled back and hit number 4. No, I jumped in it at number 4, excuse me. And it pulled back to the support line and made a number 3. And then it created a head and shoulders, and it bounced up to resistance level, which was a double top. So if you can count to 3, you can trade with me. If you can count to 4, you might make a little bit more. And that's where we broke out, was at 4. That's the sweet spot. Always remember, if you don't get what you want out of this right in here, you might be in for a knife. So you got to get out of it at your next resistance when the market's got the jitters. We're definitely overbought still, I believe we are. I'm going to look at the candlestick here in a second and see where we are on the S. I'll do it now. This one don't have crap on it. I don't have my moving averages on here. That will be set aside. Oh, it's because it's the SPX, no? Now, what was I going to do? Oh yeah, I was going to look at the weekly candlestick. I'm gonna go get a banana. I gotta eat. So this hammer, I'm gonna go to the body of that candle right there. That's the next resistance up. Not counting that. These are weekly candlesticks. $52.0506 is the hard resistance to break now. And the support to hold will be the 9. And we're going to use the top of this dragonfly. If we maintain 51.31, we're okay. Now the pivot point is right here, where that candle is and that candle. So I'm going to draw a pivot point. Oh, that's a beautiful spot. That 52.45. Now I'm going to take it to the daily. This is what I was talking about, my lesson with moving averages. That bottom one held the 9, so that keeps you bullish. It's just above the 50 SMA, which keeps you bullish. Pivot point, I don't know. We'll just stick with it. I'm going to set an alert right above the pivot point. Then I'm going to go get something to eat. We got higher lows. Now I think we can come down here and hit this one more time, this 51.81, and keep a higher low. And it's now 12.32 Eastern time, which means we still got about another hour, half hour before the fat cats start to come back. And they're probably calling their interns and saying, hey, what's it look like here at 1 o'clock? We're on our way home. And they said, well, we're just kind of hovering, consolidating at resistance. We had a nice 1, 2, 3 pullback, and now we're building a wide-lipped wedge. But we had a 1, 2, 3 bus up here for an exit idea. And now we're getting ready to get into the sweet spot of a new pattern. So by the time you get back here in a half hour, I think we'll break the 1, 2, 3 or sooner. So shall we go ahead and load up? Well, Washboardjim, your accuracy rating ranks up there at the highest of 95 to 96% this year alone. Once we break that 63, I'm going to allow you to go ahead and get in the trade. So I got 5 on order. The 51.91 strike. Gamma is at 2, which is not good. Theo's at 303. Vega's at 38. No, minus. Implied volatility. What was that? One, two, three, four. Right now.
I don't know no snakes.
Got one right now. Come on. So we got an inverse head and shoulders here. This thing can come back down and hit this right shoulder. What am I doing? Low. Oh, yeah. Dang, I should have bought Jim. That would have been a sweet treat. I don't know really where to take it. We could come, you know, this might not be over yet. We got here at 1 o'clock, we got bond market. We sold off good this morning. That still leads me to believe we still have more upside. We didn't really sell off that much at all. You know what? We didn't really sell that much off at all. Unless I'm missing something here. No, we didn't sell much at off. I mean, heck yeah, man, we're good. We bounced off the 200 on the 5 minute, folks, with a hammer. I'm tempted to go for it. I really am here. This is a tweezer bottom. What is this? I'm gonna do it. I got balls. It's on 5 minute. So if I raise the shoulder up, that's on the 1 minute. So I'll leave that and put another one in a different color. Oh, I don't want to do that. What the fudge? This is too dangerous for people to try to copy me right now. I just see the double bottom right here. So I put alert on the double bottom. That's higher than what. That could be a good spot. If it pulls back there. I gotta get something to eat. I'll be right back. There's no volume, so that makes me wonder. 8 minutes. Five minutes. I'm gonna trade this like format. I'm gonna get in the call and the But if everybody's starting to get the sentiment that things are slowing down, Uber Eats was on this morning. He said he didn't see it. He saw it. He said that people were not staying away from the restaurants, and here we go. We got 1 minute left. Now we're back down to the right shoulder. So I'm gonna grab a call right now. SPX 5190 at 255. Lotto. I'm just taking a risk here. It's one contract. Well, do something. Break it. Come on, you bitch. Ah, sucked. So I add right here. Golly, franchise. She's a cool chick. Jimmy's in the spy. Butt naked. Break the 200. Blake it. Man, this thing can fly. It's on ready, set, go. I don't think I've seen a setup like this. I have to kiss Tastyworks on that one. Entry. I mean, I was within just a few pennies. So you got your left shoulder, head, and right shoulder. And I'm going to go get my sandwich. I think I'm good on this one. I'll be right back.
But something needs to change. This business model is just, it seemingly is a dying business model. I'm not saying that AMC is going to, continue to whittle away. I'm not saying that these other movie theater companies are going to continue to whittle away, but it does seem like something needs to change and disrupt this because it's easier and easier to get access to this stuff at home on your own couch with your own snacks, being able to pause it.
Let me tell you something, mister. If they didn't get weird and be so politically correct in their movies, we would watch them. But I ain't going to another movie ever again because I don't want to watch that crap.
I think of 13 movies in the theaters last year, and I just saw Challengers, which was
Good, I guess. I mean, like, I'm a movie enthusiast, but if I'm even not a repeat, I mean, I'm not like consistently going. I guess 13 times is kind of a lot, but.
I think I went on the day the movie came out because I was off last week, and it was maybe 5% full. So there you go.
Yeah, and that's about as the movie theater attendance that I saw just this past few days. So. Yeah, we'll have to watch AMC. They do report today after the closing bell. But next name today is easily the brightest spot of this group, and that is Roblox with earnings out tomorrow morning. Now, we are expecting revenue to rise about 20% on losses per share that are steepening at around 53 cents a share. And I was curious because Roblox boasts itself as like the original metaverse, and they have all these great partnerships, like one with Walmart where you can purchase things with Robux utilizing Walmart. I'm honestly not too familiar with the video game space, but what this company does is it doesn't make any of its own digital content. It merely provides the software for these creators and developers. So then it has to pay these third-party developers based on their content, which are called developer exchange fees. Those are expensive. It can't do business without them. So right now that's sort of its hindrance, but those fees alone cost 26% of their revenue in 2023. Their infrastructure, trust, and safety expenses also cost around 31% of their revenue. So that right there is at least, I mean, that to me makes sense why we're not seeing this company consistently able to turn a profit, because it's expensive to pay out these creators to then utilize their software.
But it might be cheaper than paying them in-house and hiring them.
It must be, right?
It's still an open source kind of a situation. It's sort of the blockchain or metaverse.
We got 1, 2, 3 down here.
Gaming and entertainment. This skews way younger than either of us, way different next generation, but that can be a lucrative generation as long as they got access to those parents' credit cards and they're swiping them away. But it's not been a super strong performer ever since moving off of its highs that we saw in 2021. This is the exact kind of stock that saw repricing, valuation super extended, but it hasn't really been a huge underperformer either. It's kind of just meandered sideways in a pretty volatile range between about 30 or 20 and 40. But it's in the upper bounds of that now, about 39. So you look at that, there's a lot maybe to be excited about in the future for this stock. But like you said, maybe some of the revenue, the earnings, some of that's still a little bit of a question mark in the near term.
Yeah, and I have to say that I totally agree with you. From a price perspective, actually, this looks pretty good in the graveyard of price activity we have for the rest of these names. The last name today is Plug Power. Earnings out tomorrow morning as well. This name has about also 30% short interest, so another name that could be volatile, but this was once a front runner in the hydrogen fuel cell industry, and we will not get too deep into that, but basically building out this global hydrogen network, while it is expanding, it's also been very expensive, and the network for hydrogen refueling stations is still relatively tiny, so this limits in the appeal for these overall hydrogen-powered vehicles, other transportation sources, which is where Plug Power makes all of their money. So I would say that it doesn't help that they've had a consistent history of sort of over-promising, under-delivering. Their CEO has been criticized for setting unrealistic goals that have failed to frankly materialize. So to speak to that, they have a pretty bleak earnings history. They've missed estimates in each of the 4 preceding quarters. The negative earnings surprise is around 48% on average. And yeah, this quarter we are expecting revenue to increase, and we are expecting, I mean, overall operations to see a nice bump from their revenue, but it still has been consistently underperforming as far as their own expectations.
Yeah, short term, who knows, right? $2.50 stock. You talked about a lot of these stocks being kind of highly shorted, a lot of doubters when it comes to it. Just takes a little bit of positivity to change that dynamic in the short term on a pretty substantial percentage basis. But long term, and this is not limited to Plug Power, I would throw the Teslas, the Rivians, all the names associated with, you know, uranium, anything, alternative energy. Long term, to continue to see more of this type of price action, this upside price action, I feel like you need to see some of the traditional fossil fuel sources, your crude oils of the world, maybe your LNGs, your natural gas type of stuff, to go haywire again to the upside. You got to incentivize the alternatives. And with crude oil easing off its highs and a lot of those fears kind of subsiding, what's the incentive to go out and get, you know, hydrogen fuel powered things or electric powered things when, hey, gasoline's getting a little cheaper?
Hey, it kind of reminded me of like the overall theme of so many of these names is like price parity. If it's so expensive to basically utilize your service, no wonder we are seeing this weakness. Same goes for like AMC, same goes for Beyond. But we'll be looking more at the charts as well as example trades in both Beyond as well as Roblox ahead of their earnings. Stick around, Next Gen Investing. I'll be right back.
Come on, baby. Break it.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're gonna always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free.
Still in it.
Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chartmaster segment. So today we are looking at Beyond as well as Roblox ahead of their earnings. We'll start off with Beyond though, as Beyond me, I have to say, looks not as terrible when you look at a year-to-date performance basis and then you zoom out and things look awful. But walk us through the technicals here, Rick, as I'm sure we can make the case in either direction just given how far things have fallen.
It's been a rocky road for this stock, to be sure. And, you know, we're still down quite a bit from the yearly highs. We're down almost 16% from those 52-week highs that we saw above 19. You know, in a lot of ways, the chart begins here for the purposes of technical analysis because we had a significant gap down on earnings, and we've never filled that gap. Since then, we had kind of a long decline here, and then kind of range-bound price action between $6, which is our green line, even though we did peak below that. We hit 558 for our lows, but we bottomed out at 6 twice. So we've got like a triple bottom to consider here. And then the highs near 12.12 was this point here. So we've got some pretty clear boundaries that we want to keep an eye on for this name. We can see that as well. We had a downward sloping trend line from those highs near 12.12 that's been broken. Now we're trending upward. We've crossed above our 2 moving averages. Yellow 21.
1, 2, 3 unbind.
Exponential moving averages here. Notice as well the extremely heavy volume that we saw during our last earnings gap to the upside here. Even though the move did fade, we filled the gap and then some. You know, that was still a noteworthy occurrence because it signified a lot of conviction behind the move upward. We haven't seen anything close to that since then here. But, you know, we didn't quite make our way above this area right here between 8 and 9. So we'll have to see what happens as we progress into this earnings event.
Yes, and we will definitely have to see what happens, as I'm sure this will be a volatile name. But as far as overall now, the momentum of this recent trend, I mean, maybe seeing any degree of optimism from the RSI?
Well, we had a pretty big rally in price as well as a matching movement in the RSI. We went all the way from the oversold area above the 50 midline. We didn't quite make it into the overbought area though. So that was maybe not exactly what the bulls wanted to see here. Now you can see as well, we're invalidating this trend line here that we formed on the RSI. We're just kind of crossing below it at this point now. So we have a bit of a breakdown in RSI. But that's not really that uncommon for it that something like this to happen as we head into an event risk situation like earnings here. So maybe not a head for the hills moment here, but not exactly what you'd want to see if you're bullish either.
I mean, absolutely, and I'd say that that's even putting it kindly to the bulls that have held on to this name. But now, as far as some support and resistance levels you're watching, walk us through your thinking.
Sure, and we can see as well, you know, now that we reveal our volume profile study, our blue bar graph on the right side of of the screen that shows where the heavy trading activity was, we can see this level near 840 was the volume profile point of control that we had trouble getting above, the area of heaviest trading on the chart. So this is a resistance area. We failed to crack above it here, so that's why it can be useful to include this study. It also shows areas of heavy trading called nodes. We've got one around 7 perhaps and one around like 1050 or so. So if we were to keep moving upward, if we get good earnings, if whatever happens and we move to the upside, there's not a lot of clear resistance anywhere nearby. I suppose you could say these highs near 9 would be relevant to keep an eye on here, but I had my eye more on this volume node here, our purple 250 2-day EMA near 1087, and then these old highs near 1212. Those seem like upside points that seem pertinent to our interests here. To the downside, we've got a bit of a confluence. We've got our yellow 21-day and orange 63-day exponential moving averages roughly in line with our upward sloping trend line. If we break through that area near like 750 or so, the triple bottom, this green line near 6, would be another key important area to keep an eye on.
And we're already moving about almost 5% lower even ahead of these results. We're already seeing some of that volatility sort of pricing into shares. So now when we trade this name, Alex, I did see that the options market's pricing in around $1.70 move in either direction. So that would be over, almost a 22% move from where we're trading. So say we're looking, for example purposes, to lean into some of this volatility in either direction.
Yeah, and this is one of those things that can be customized if you have an opinion. When we're looking at Beyond Meat, this is one of those stocks, much like Snap, where there's a lot of negativity built around it. That can be kind of a powder keg for an upside move that can be counter trend. But we also know that there's a lot of negativity possibly for reasons where the companies aren't really executing that well and they're really being punished for that. What we know about this earnings season, there's been a lot of big moves in both directions. So leaning into that a little bit, buying a straddle, not for this week, but rather for next week. Now it's a little expensive, it's $2.50. And of course, if you get kind of an unchanged move, we use the 8 strike. If you get a move to exactly 8, you can lose as much as $250 on this, but theoretical unlimited amounts of upside if it does go higher, and of course, theoretically it can go down to 0, and you can make that full 550 to the downside as well. 550 for the break even on the low side, that corresponds essentially with the all-time lows in the stock. And then to the upside of 1050, that corresponds sort of where Rick was talking about on the chart, but also if you just got back to where we were in the 6-month highs around 12, that would be firmly above that. So sort of playing the ranges that we've seen in this stock, looking for a big move not only on earnings, but perhaps to continue into next week as this one doesn't expire until May 17th.
So we have some time, not just purely looking for an earnings move, but it's sort of hoping to see that volatility obviously in the back of its earnings. But now to look at another name reporting, that is Roblox. And Roblox chart, I have to say that it definitely looks more encouraging than Beyond's, at least as of late. But it's also been kind of disappointing this year. We're down 14% since the start of 2024. So again, walk us through your thinking here.
Yeah, not a lot of net change over the past 52 weeks either. We're up about 8% during that time period of our past calendar year here. And the recent term price action, though, within the past couple weeks or so has actually been pretty interesting. First of all, let's look at the broader picture. We topped out near 47.2 on the yearly basis here, forming a falling wedge type shape. 2 trend lines converging toward each other, both sloping downward here. But you can see from this point to this point, we had a nice rally. We went up like 20% or so. We crossed above all 3 of our moving averages. All 3 are now pointing upward as well. Both of those are positive signs for the trend development. You can also see that we broke out of the pattern. So we've got a lot going on that happened rather quickly in this name here. Now it's looking like we're perhaps going to retest this upper trend line here. Certainly not an uncommon situation to happen. It happens often enough that traders know to be on the lookout for things like this to happen, to retest an old resistance level after a breakout here. So keep your eye on the level near like 39 or so. That could be one area to keep an eye on for a potential bounce.
So now in terms of RSI here, what is momentum telling you? Because again, I know we start to see momentum sort of ease off in earnings, but Walk us through what you're seeing.
It just ain't going my way.
Trending upward here. We've got a trend line that we can draw based on those lows here, and then we outpace things a little bit. We're a good bit.
Not looking good at all.
We crossed above the 50 midline that separates bearish and bullish momentum here. So we also made new relative highs above our previous peak. So things look pretty decent for momentum in this case here. The next step for the bulls would be to take out this resistance level and cross above the overbought area. That would be a bullish sign if we were to make it above that threshold of 70 here, especially if it happened concurrently with a break above resistance in price.
So now some price levels that we're watching here. Roblox also is somewhat taking it on the chin ahead of their earnings. We're down about 3.4% here, but what levels are you keeping on your radar?
Well, once again, much like our last chart, once we reveal the volume profile study, we can see that the point of control is a key area to try to push above in terms of resistance here. That's centered right around 40.
Okay, I'm going to add a bunch right
That's
here.
where most of the trading has happened on this chart just in general, not really
I got
any
two
other
contracts.
major
I'm at
nodes anywhere
217.
nearby, or even the major nodes don't even really
two
hold
more.
a candle to the trading activity we've seen around this.
Okay, I got a 1, 2, 3 down here. I got one at 255 and one at 180. I'm going to try to get 130. I'll just leave them alone, one or the other. Could be a double higher low off the trend. That's a tasty hamburger. Not been an easy day. Here they are, Josh. I don't really want to sell it until I drop below this. $51.52 was my next one. Well, come real close. Raw blocks.
Make any money on these?
Gotta kind of be right and gotta kind of hope that things move, I guess, because both of these names are looking to capitalize on some volatility. But we'll be watching both of their reports once they release. We will leave it there for our Chartmaster segment. Now, coming up next, it's time for FOMO. We are talking Intel, unfortunately, with another move to the downside today. We're down about 2.8% on more restrictions to China and how this impacts their relationship with a very important customer being Huawei in the country.
29.61 I had on this. I haven't looked at this one in a couple weeks.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere,
Come on, baby.
on any device
Break it.
for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Yeah,
at each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday.
Lichtenstein.
On the Schwab Network.
Well, my name is Ben Lichtenstein. I'm a German.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Welcome back to Next Gen Investing. It's time for FOMO. So joining us now to discuss the move to the downside in Intel is Caroline Wood, Senior Markets Correspondent for the network. So Caroline, unfortunately not the most positive news today, and I was hoping we eased off of session lows a bit here, but not by much, about 20 cents.
Hey there, Jenny. Yes, Intel shares under pressure today, down about 3% after it updated its guidance following a new U.S. ban on sales of chips to China. So Intel, of course, got punished late last month because its guidance failed to impress, and now it's updating it and getting a hit once again. Intel said it expects revenue for the second quarter to remain in the original range of $12.5 to $13.5 billion, but below the midpoint. Intel did say, though, that it continues to expect revenue and earnings per share to grow year over year versus 2023 on a full year basis. So not hugely, not a big, huge move there, but definitely weighing on shares. This, of course, comes after Tuesday, the U.S. revoked the export licenses of Intel and Qualcomm to sell consumer-related chips used in things like PCs and smartphones to China's Huawei. The Commerce Department spokesperson said, "We continuously assess how our controls can best protect our national security and foreign policy interests, taking into consideration a constantly changing threat environment and technological landscape. As part of this process, as we have done in the past, we sometimes revoke export licenses. We can confirm that we have revoked certain licenses for exports to Huawei." Now, Huawei recently launched its first AI-enabled laptop called the MateBook X Pro, which is actually powered by Intel's new Core Ultra 9 processor, and that drew quite a bit of criticism from U.S. lawmakers because, of course, the U.S. has been trying to crack down on exports of advanced AI chips to China, and they suggested that the Commerce Department had actually approved those exports to China for that Huawei AI computer. Now, according to Bloomberg, officials are also considering sanctions against 6 Chinese firms that they suspect could supply chips to Huawei as well. Of course, Huawei's been on the U.S. trade restrictions list since 2019. Now, this new ban may not affect a huge volume of chips, but it shows that the U.S. is really trying to restrict China's access to the chips, trying to continue the crackdown and trying to really curb China's tech power. And the bans could have a significant impact on Huawei. It relies on Intel's chips for its laptops, as I said. They don't rely all that much on Qualcomm, though. Shares of Qualcomm, despite being included in these bans, only down about 0.3% today. Qualcomm did indicate in their earnings report, though, that they didn't expect to receive revenues from Huawei beyond the calendar year, due in large part because of the fact that they were just supplying 4G chips to Huawei, and said Huawei's already coming up with their own 5G chips, and as such said, we don't expect any revenue from Huawei product business in 2025. So not having a big impact on Qualcomm shares, but Intel shares taking a hit, down about almost 3% right now down 40% year to date.
Yeah, that's the key piece, I think, Caroline, right? This isn't the first negative piece of information when it comes to Intel. You look at the performance over the last few years, it's disappointing, and I can't have imagined a better setup for a major semiconductor player with all the fiscal stimulus into this space, all the kind of onshoring and moving things to like, hey, we need this key infrastructure to be made in the U.S. by American companies. Yet you have a 50% near decline over the last 3 years in one of the biggest companies in this space, while all of its peers just soar to new heights. This, is one of those situations. It almost feels like a, fool me once, shame on you, fool me twice, shame on me. And you can see the analysts kind of feeling the same way. 2/3 of them just in the hold camp. Caroline, can't blame them, right? I mean, how many more times are they going to stick their heads out just for Intel to let them down?
Yeah, and you mentioned over the past 3 years, even if you just look year to date, Intel down 40%. I was taking a look at some of the other chip makers to see how they were reacting to this news, seeing weakness across the board today, but Qualcomm, Nvidia, AMD, Marvell, all higher year to date, so not even close to Intel's really dismal performance so far this year. As you said, yes, the majority of analysts in the conservative camp, median price target does imply some upside. I mean, it's $38, which is, call it $8 higher than where it's currently trading. But I think that this Bernstein analyst really kind of summed it up after Intel reported earnings, saying, we'd like to believe the bottom is in, but we've been lost count of the amount of times that we have heard it. And saying, while we believe they are doing everything they can to try to repair things, it is clear that the company is profoundly broken and will take years to see the fruits of their currently exhaustive labor. With success in their endeavors far from assured amid execution difficulties and structural headwinds. So it just kind of goes to show what Intel is up against. It's really been trying to remain, or to try to become relevant again, I should say. But
I do believe the workforce has changed a lot. Just imagine, and I don't think I'd want it to happen, any of them hateful protesters come get a job and work. But I hope we can do background checks on their history. Figure out some way, if we know that they've been protesting against America, I'd want them out of my country. Or at least out of my workforce. That if you're like an Antifa member or a KKK member or a Black Lives member, you're all disqualified. Okay, I'm at 1:30 now. Not working. Not working. Mara breaking out of the channel. Mike do high. Mara. Okay, we're at 120. Well, this is a 2-minute right here. I'm going to try to watch it. I'm going to see where the 2-minute is at the 200 and the 1 minute. That's a big difference. Let me set 2-minute again. I'm going to save this. Oh man, come on. So I got a 2-minute time frame on this. I kind of liking this a little bit. Makes it a little bit more cleaner. And you still can form the patterns. So I might study this for a little bit. Did it, baby. Now what the frick happened here? God, turn it. 3 white soldiers. 3 white soldiers, 3 white soldiers, yabba dabba doo. Breaking out of a flag. Break it. Three hollow white soldiers. That means they're buying at the bid, I think. Am I right, Mike? Hollow body? Or maybe they're not hollow. Maybe I just didn't fill them in. Yeah, they're not filled in. Never mind. Come on, baby. Make it to the limit. One more time. You bought it at the sweet spot of the falling wedge. Good job, Flip. We got to break this 200, and that's the catalyst. If you're up You get out at the 200. I'm even. So I wish I'd have bought more down there at the bottom, and I didn't do it. Man, I had a perfect opportunity at 120. And they were at 220, so I could have made $1,000. And I just failed to do it. But I do like this 2 minute. Now we're looking good. 245, keep going. I want 100% out of these suckers. I can't believe I didn't buy them at 120. I said I was going to do it, and I didn't do it. Dang it, gum ya. You get a little nervous, I guess. Oh boy. Come on, baby. I don't say maybe. Break it. Ready, set, go. We got my 5183.13. Next 5183.77. I love you. You've not been very easy for me today. I might have to play a song. Took my $1,100 profit. Great job, Rick. Break it. Meta's at the 200. We got a cup and handle breakout coming on Apple maybe. We got an inverse head and shoulders on Amazon. And AMD is now breaking the 200 SMA. Yo. Yo, daddy. $280. I'm happy. I'm real happy. I really am. I mean, it was hard yesterday, but God, this one I think was a little harder. I felt bullish yesterday, but today, that's funny. I come in here saying, man, this chart's all pretty and working just right, and all of a sudden I'm going, oh, no. I mean, I'm down like $250 and I'm on just 2 contracts. And I broke the golden rule. You know, most traders will sell at a 50% drop, or that's the golden, I always say, after a parabolic breakout, to pull back 50%. So I'm sitting here holding, and then I have the greatest opportunity to buy it at 120, and I just didn't do it. I had to order 10 contracts. I would be up quite a bit, but that's all right. And timing, you're depends on what kind of person you are. If you're an introvert or if you're shy. Some guys I know that just don't give a crap and they throw $250,000 in on a trade. I'm just talking to a guy I made real rich that I haven't seen in months. I mean, I'll never dream to have that kind of money. He used to run United Traders. We were in United Traders. I'm not talking millions. But he's got the mind and capacity where he could trade 30 stocks, which I could never do. I mean, I can barely trade 2 or 3. I started trading 10 at once, and I blew an account. So I said, I'm going to cut it down to 5. And I started trading 5, and I blew my account. And then I said, I can't do this. I just got to trade one at a time, because the market has thousands of tickers. And I can make, 60, 70 bucks a day just trading one at a time. That's what I said back then. Now, 1,000 a day easily. They're at 295 now. So I'm up 170. And look here. Let's find a resistance. So each one of these peaks, here's your inverse head, here's a head and shoulders. We busted past the head and shoulders, so now that becomes support. 10-4. Man, that's a stressful trade. Very stressful. There's one resistance, and there's my third resistance. Another head and shoulders. It's as simple as 1, 2, 3, high or low. 1, 2, 3. I just got to, I just got to count. I'm shook up, freaking out down here, and all of a sudden, it's easy as counting to 1, 2, 3. I like this 2 minute. Oh, this is the 1 minute. There we go, baby. 310. I can't tell you how shook up I was in this trade. Nailed resistance. Out at 320. Jim. Break it. When I was in Hawaii, I met this big old fat Samoan. And we're going to jump on one of his tunes right now. You don't want to mess with Samoans. met him in a park. Got to play music. It was strange moving to Hawaii and playing bluegrass.
Lose the extra baggage.
Playing bluegrass and rock and roll, and then you go to Hawaii and it's a whole different kind of music. So I'm sitting in this bar and these guys are singing and playing music, and I say, man, you guys sound good. I don't know if it's still on. Red light, green light, go. Red light, green light. So we wrote a song, red light, green light, go. I was telling him, I said, hey, man, I see all these guys racing around here and they're running, hurry up and get to the red light. And I finally come trailing behind them and I wave at them. You beat me to the red light. So we wrote a song. It's not on here. I don't remember the band. I got the CD still. Higher level. I got a couple contracts still. Tune up my dobro. Man, I'm so. It's neat to know that you can sneak in on these bottoms like this and freak out. I'm really good at bottom fishing. I mean, this just helps me, you know, with my confidence level. It didn't look too good this morning. The only thing kept me is bull flag. It's a bull flag, right? And if you count to 3, that's a bull flag. You was too scared to hold him? Oh. Shit. Man. We got to break that. Did I scare you with my talking? I want to know. Be honest. Because that could help me improve the way, you know, I can keep my mouth shut a little bit more sometimes when I'm stuck in something. Yep. And I was looking at the SPX. Maybe I'll be doing them. I'll talk about both of them. Yeah. Well, it's very seldom I get stuck in a trade like that. I mean, I get stuck in them, but then I used to really breathe hard. People could tell when I was stressing out because my breathing habit would change. And I'd almost get to the point where I was hyperventilating. And you can't do that when you have epilepsy. You can't hyperventilate. So I had to condition myself not to breathe hard. And the only way I figured that out was by sticking in the... I traded with Vegas, and I'd get out of trades, and a few hours later it'd pop. Did it to me every time. All the time. 99% of the time. I'd get out of a trade and bam. And then, especially when you're in a bull market and you're above support on those weekly candles, that gives you a little bit of confidence, but then to realize a little too late that this is a bull flag. And when I failed the fourth time, man, I started freaking out. I just didn't know what to do, if I should hold on. And I had a chance to buy them suckers at 120. And I would be up, real good. So we need to go with our first gut instinct and kind of stick with it. I think if you have a good gut instinct, I have a real good one. I can tell a character, I can look at a person and more or less figure them out. I got a pretty good gut instinct. If you don't think you have good gut instinct, then you got to try to find another sense. It's not the easiest trade today, that's for sure. It looked awful simple this morning, but man, it changed its attitude real fast. And actually, it doesn't look as bad as it is. If you just look at the bigger picture and clean this up. You've got an inverse head and shoulders. You got to bounce off that shoulder line. 1, 2, 3, boom. 1, 2, 3. And that's a bull flag. I couldn't say it any easier. Then you got a 1, 2, 3 right here. To resistance. Inverse head and shoulders, and then you got the 1, 2, 3. With the inverse head and shoulder. I guess that's 2 minutes. Well, I'm going to go stand up for a second. I'll be right back and we'll go through the watch list. Maybe if they did use AI, they'd be able to get ahead of the curve. Correct. Boeing pop. Today, a FedEx plane could barely land on the tarmac, and the stock runs up. Great news for Boeing. Another whistleblower must have been eliminated. That's funny. Oh boy, here comes the layoffs. Oh, bowling. Boeing. Who has layoffs? I'll show you. I just got a message saying it was. I'll go ahead and post it. Thank you there, Bug. Where's all my platforms at? I can't find all my platforms. The 180s? Is that what you scalped? Right off the 200 too. You know, this looks a little overheated to me. This SPX. I got a nice yin yang. Oh, I have a 1, 2, 3 here. Yeah. I'd almost swing puts on this sucker. That's a good job on Boeing, Susan. Johnny! See, there's Johnny right there, and that's me. I had to go out and work. Drop out of high school. Worked with the mob for a while. Was a hitman. If you didn't pay up, I'd break your legs. Had to learn how to speak Italian. Let me show you a little bit. What's the matter, you? You no pay up, I break your leg.
Down 8%, while Lyft is up 4%. I want to hear what our panel has to say. Seema Shah, VP of Insights at Sensor Tower, and Matt.
I'll tell you what the panel will say. Uber is overbought. Again, I want the paperwork checked out. We need the DOJ and the SEC involved. I do believe that the high gas prices and the high cost of cars is making it difficult for people to get an Uber job. You need reliable transportation. And with the cost of cars these days, it's not worth the pay. You know? So I think it's going to probably tumble a little bit more, baby. Gasoline prices. And then they said they weren't going to use the EV cars no more. They cut ties with Tesla. So we have a situation on hands.
Doing well from the way our metrics are, and we're seeing a lot of retention for both of them. I would say users have opened Uber and Lyft 14.
You gone to McDonald's lately? A Big Mac cost you $25,000.
Every day. So it's really become part of people's life. And so I think
I went and had cashew chicken the other day at the joint that I haven't been to since COVID. I'd go in there and I'd buy me a nice little order, you know, decent order of General Chicken and an egg roll for $8, maybe $9. I went in there about 3 or 4 days ago. I had to pay 15 frickin' bucks for the same meal, and the meal was smaller than the one I had before. But I got 3 fortune cookies. I mean, I got 3 things out of 1 fortune cookie. So I felt like it was a deal. It's up $7. The same order, and it's smaller.
Cut a lot of the excess.
I mean, the container was like,
and the results really speak for themselves. I mean, if you look
at least 25% smaller than the ones I used to get.
Performance between Lyft and Uber. Look at 1 year, 6 months, 3 months. Lyft has done.
Heck, I ate it and it was gone before I even know it.
If we're looking at stock performance here, so yeah, I think my vote's still on Lyft here.
Lyft.
So you've been here touting Lyft over Uber for some time. I wonder if there was a way for them to get together. Is there a way for them to get together ever?
No.
Matt, or is that really just out of the realm?
It's out of the realm. Honey, we don't want a monopoly. The government won't allow it.
Situation that they're in. We have a perfect duopoly here. The products are essentially identical. You know.
I've never used them. I know some of the guys in here have used it, but I've never used it. I don't want my food cold. You know, I want it to be hot. I order a sandwich and I get here an hour later. I said, what the fuck, man? This thing's soggy. And what'd you put in my drink? Did you put some LSD in there?
Together, I don't think so, but it'll be interesting to see what they do strategically from here on out.
Yeah, yeah. You have a lot of metrics, Seema, on Canada.
Oh, she don't look
on
happy.
How these are doing when mobile apps.
Now she does.
And, you know, there's so
It's hard
many
to smile right now. I'm
different
too
metrics,
tired.
Very exciting, but I think it's better if you sort of tell me.
I love the fake smile. Watch this.
Yeah, so there's a couple of things that stood out. I think I already highlighted that they're still continuing to grow active users, both platforms. As far as our data is concerned, we saw the growth in Canada for Lyft, which was substantial, 122% year over year in downloads. And they really ramped up their ad spend there. And Uber has been there for a number of years, and they only saw a 2% lift year over year. So I think just sort of to piggyback off what Matt said, perhaps like if Lyft continues to grow, it might expand more outside of the U.S. They tend to be much more U.S. centric than Uber, which is obviously much larger and global. So that's the first point. And then also what I mentioned earlier about how many, we call them power users, people who open the app more than 15 times a day, 15 times a month. And we're seeing growth in that from both Uber and Lyft. And so I would say that we are seeing that. Yeah, so I think that's pretty interesting. The way we see our data, there's a chart that we have that shows that Instacart users open the app, use Uber Eats 31% more than just the average Uber Eats customer. So they're, and where Instacart is located versus where Uber Eats is, this is a good opportunity for them to break into that market with a slightly different demographic. Instacart users tend to be more female and older compared to Uber Eats based on our data. So this gives them a chance to broaden, I would say, their customer base as a whole, but also they're also going to a market where the user is also more favorable to Uber Eats as a platform. Because, as I said, 31% open Uber Eats that are Instacart customers, and 44% of Instacart customers also open the Uber, the native app. So there's a lot of overlap and a lot of opportunity for Uber to gain share through this.
Look, I live in New York City, and there is a lot of Instacart and Uber Eats and Ubers, for that matter. DoorDash, we didn't get a chance to talk much about that. Matt, I'll give you the last say for 10 seconds.
Yeah, again, this is a situation where people have been betting on Goliath versus David. My vote is on David Risher.
Thank you both so much. Seema Shah, Sensor Tower, and Matt Okus of Venture Science. Glad to see you both. Thank you. That's going to do it for us here on the watch list. I'm Nicole Petalides. Thanks for being with me. Download the free Schwab Network app. It's available in the Apple App Store.
So I got these leaps.
SchwabNetwork.com. Make sure you.
I'm down on them. 17 July 19th, $17 strike at 210. And they're at 195 right now. Three Black Crows. I don't know why it didn't go up in price. It should have went up. But we'll go up. I'm only down 10 cents. 12, 13 cents. Should have been watching it. So they liked Uber Eats. About 3 months ago, Josh was rambling on about Uber. How great Uber was. And I was arguing with him. Do you remember? On CNBC. I said, Josh, quit pumping this piece of crap. And he kept pumping it. Oh, I'm in it, he says, and it drops $10. I'm still in this thing, man. I'm buying the dip. The guy doesn't know how to count to 4. He could have made a lot more. 1, 2, 3, 4. It's all he had to do. He counted to 3 and really brought it to its knees. But he said we were going to break this triple top. And I say, no way. It ain't gonna happen. And I was right. That might be a good trade, franchise. Might be a good trade. So he's pumping this stock at an all-time high. It's going to 90 and 120. And I was saying, no. Irrational exuberance. Why? Because we're up 400% in a year and a half on this thing. I want you to really understand that we were at 20 bucks and it ran all the way to 80 on his pump. And he was pumping this thing when we had this huge run. I'm going, are you serious? He was so confident in it. That's, CNBC. I can't pull my thing down. So I'd take the Fibonacci and I'd run it from the top of that candle right there. Watch it pull back to the 50% line. And it might still be way overpriced because that news was not good. So he's pumping this. Oh, they have excellent earnings. They're expanding. They're getting this. They're getting that. I want this thing to dive again so I can really click big on this one. Carvana. That's why I like listening to them CNBC guys, because they pump these triple top all-time highs, and I want to short them, every one of them. Yesterday I shorted NVIDIA because they pumped it. It's going 1100. No, it's not. Not for another year. Not until the end of the year. And SMCI. And then Mr. I didn't look at Mr. today. It's probably up. 3 white soldiers. We pulled back to that support level in that channel of the Fibbies. Actually, I could probably put that thing down here. Heck. I'm going to go make some tea. Oh, look at that hammer. Look at this hammer here. Oh, damn, man. Look at this. Sick of looking at that blue. Hey, 2 wicks. 2 wicks, baby. One, two, freebie. Boom. Double top. Pull back. Blake and boom. Spy by the V-ball. Oh, it's power hour.
Pushing the limits of our friendliness for sharing tech, but I mean, this year again, it's a constant beatdown of news flow that is, more negative for some companies than others, but it's definitely a market that is going to be very difficult to grow into, if at all, at this point.
I think the relationship between the U.S. and China right now is interesting. And then they try to sell it back. Remember, EVs. When you talk about all the technology, all the things, steel, all the things that China does really inexpensively, you know why they do it inexpensively? Labor. And then they ship that across at low prices, and that hurts the rest of the world economy. So what do? You put tariffs on. That's the U.S. does. And then, oh, that's crazy. How could you possibly put tariffs on? Well, you have to protect these companies that they're subsidizing the production of. I mean, it's really quite simple, but if you start the basis with China's not our friend, makes it a lot easier going forward.
Sure. Intel dropping notably on this. Qualcomm kind of you do see where the market's preference is already, where it seems like maybe Qualcomm and the market's given it a much easier shake, I guess, because it's just been a better stock in general. Like Intel bearing the brunt of this is like, all right.
It's a pretty good story.
Yeah, it's kind of like pile on to Intel a little bit. I feel like they should be hitting Qualcomm more than it is. I mean, Qualcomm's basically
Which is what's so amazing about it. And I think we've been talking about this bottom in Intel as long as we've been talking about the bottom in like the PC market and the recovery that we keep waiting for. And I feel like those that are
bottom that keeps moving lower,
the bottom that we cannot seem to hit yet. So I feel like that's a good lesson of like, hey, sure, it's part of this chip and AI hype, but I mean, is it really? I mean, we're pacing to close sub 30 for the first time in almost a year. So the bottom keeps getting obviously lower and lower. So if you've been hoping for that rebound and recovery story, it just hasn't been Intel, frankly.
Relevant for ARM possibly tonight?
I think ARM is going to be so interesting, although I tweeted about it yesterday because I just think it's fascinating how their overall the business is so profitable because basically their
this looks
are
cheap.
royalties and licensing fees. I mean, this is a company that has been able to have a 97% gross margin. I mean, it's crazy as far as the health of its balance sheet, but then someone wisely pointed out to me that still SoftBank owns 90% of this company. So what we have seen this momentum since its IPO, and I mean, it was the best performer of the IPOs of last year. It's a relatively small public flow.
Yeah. Careful of decelerating growth by ARM.
Right. Well, I mean, last time the market was okay with it. It just ramped up. It was an extraordinary beat. In fact, it was kind of one of the signs late January that we had a big leg of frothy call buying and speculative behavior coming to this market.
Yeah. A year ago, in fiscal third quarter of 23, they shipped 7.9 billion chips. Fiscal third quarter 24, 7.7 billion.
Right, so it's slowing down.
Exactly.
Yeah, all right. Well, we got earnings tonight. I love saying that. Isn't that just great we get to say that tonight when it actually means 4 p.m.?
When it means in an
It's
hour.
such a-
50 minutes
it's
from
such
now.
a market-specific, living in your own bubble tonight in about 50 minutes. Okay. Thanks, Kevin Hanks, Jenny Horn. Let's discuss the macroeconomic situation as well as the calendar for investors. Since this week is so light, we'll look ahead a little bit with Colin Roche. He's a CIO at Discipline Funds. Colin, welcome back. What's keeping you busy here the last few days? Because it seems like we just took that last jobs report and are trying to spin a whole new narrative on the macro from it, Colin.
Yeah, but it's still all about the Fed going forward. So, let's jump into a time machine here and start to think forward a little bit. So the way that I'm thinking about a lot of the stuff that's going on right now is really centered around the election. And so thinking forward, the next few core PCE reports are going to be really crucial. So I've got the April and May reports coming in at probably about 2.75 and 2.65%, okay? And that's a rate of inflation that I think the Fed is still going to be pretty uncomfortable with. So that gets us into basically the June meeting where core inflation is likely to still be around 2.5% from the May reading. And so you've got a situation here where I think the June cut is off the table. That means that the June reading is going to be around 2.5%. So maybe, that's like a good case scenario here. And that means that the July rate cut is probably off the table. Now, the interesting thing looking at the election is that you get to the September meeting then, which is just 3 weeks before the election, and I think there's no chance, I think, that the Fed is going to want to look politicizing of the election and be potentially cutting rates. Unless something really bad is happening, I think you have to knock off the September potential for a rate cut. That takes us all the way to November. So we're basically flying without a Fed put from today all the way into November, and that only gets us to the first cut.
The graphic you have for us, very helpful. I love it. So the idea here that the Fed will want to kind of avoid the appearance of non-neutrality by making a big move. I think it's salient. I think it's basically kind of trying to read the guy at the table a little bit, which can be kind of a risky move. One could argue maybe they want to show impartiality by pretending like the election doesn't exist, but we also know that inflation's not cooperating, so it seems like the next couple prints could really kind of lock in that expectation.
Yeah, the next 2 to 3 are going to be really crucial, and it's hard to see. I mean, inflation's moving in the right direction, so I don't want to lose the bigger picture here. But at the same time, it's not moving down as fast as the Fed wants, and I don't think that the next couple of prints are going to come in nearly close enough to where the Fed is going to be able to say, hey, we're really comfortable with the trend. I think they want to see inflation either below 2.5% on core PCE or at least moving well below it before they can really definitively say. And that's just super interesting because if you don't get a July cut, I think then we're all the way to November. And in that scenario, that means that the Fed, let's say that they do cut in November, they're still at 5%. So when you look at things like, either the lending standards or even things like the Taylor rule, 5% is still very, very tight. And so it's interesting because you are getting into the scenario where you're getting into 2025 and the Fed is going to be higher for longer.
That ain't the prison guy, is it?
Into next year potentially because of this election.
What a makeover. That can't be him. That's got to be a different guy. Unless he went out and done some crack last week.
A sustained environment of tightening with no cuts. Colin, how are we looking in terms of your view of kind of what's under the hood?
Yeah, my view for basically years has been that we're in this COVID mean reversion process. So, right now, things kind of look perfect right now. The last labor report was really a Goldilocks labor report in terms of it was softening.
It was down 25%.
Probably, falling demand, but not crashing demand. So you're not in a scenario where there's panic mode. But I think that this is an especially interesting sort of environment. I think especially for stock market investors, because the stock market, at least in my view, is this very inherently long-term instrument. But if you're using it or viewing it as a more near-term instrument, in the next sort of 9 to 12 months, there's a lot of sort of hairy sort of situations that can occur where you don't have the likelihood of the Fed cutting unless you get an emergency. And if you get an emergency, well, that means something inherently is going sort of haywire with the economy anyway. So, it creates a lot of risk for these sort of, more high beta types of instruments, especially in the next year.
Okay. As far as the trade-off between growth and inflation goes, those last couple prints, if you combine ISM, look like we're kind of going the wrong way from Goldilocks, something like a purgatory maybe, where your growth slows down, inflation sticks, especially if wages come down. I mean, is it something we should be rooting for, Colin? The way the market still kind of celebrates cooling wages is rubbing me the wrong way, because it's like, that's fine, if prices are coming down, but a lot of the core prices for staples, non-discretionary items are still pretty elevated. If wages go down, that stinks.
Yeah, this is part of the sort of Fed conundrum, is that the way they're trying to ease the economy is by essentially hurting consumer wages and potentially hurting the labor market at some point. We haven't really seen that transpire yet. I think that's been one of the things that's been most surprising about this whole scenario.
Because he's behind the curve.
A lot of weakness in the
labor market. It doesn't take a brain surgeon to figure it out.
Come down, but there's still, what was average hourly earnings was at 4.1% last week. So, that's a pretty healthy reading by any measure. I expect that to come down. I'd be shocked if it doesn't come down into the 3s at some point over the course of the next 12 months. And that's the situation where things start to get a lot trickier, because then you don't have real wage growth again, and consumers start to feel kind of the bite of interest rates.
Okay, but for now, it seems like we've got a little bit of room to give, given where wage growth still is holding on relative to inflation.
Goldilocks is not getting eaten by the bears yet, that's for sure.
Okay, all right. Colin, thinking about how to play it then, what's the approach for kind of the 6-month investor, or if we just kind of compare to our conversation 6 months ago about, just picking up a decent yield? Is that back on the table with the move we had in rates higher, or is there a better way to approach the macro over the next 6 months?
Yeah, it continues to be a great environment for savers, for anybody who is invested in sort of like short-term instruments or has really inherently short-term expenditures. Things like T-bills, and even, I've been saying you can start extending the maturities here, start trying to sort of front-run the Fed where, don't go crazy and, go into 30-year T-bonds or anything like that. But I think it's perfectly sensible to start thinking about things from the 0 to 5-year duration range here, where you're starting to extend maturities to a point where you're thinking about front-running the Fed, essentially. But at the same time, I think if you're an equity market investor, having some insurance in the portfolio makes a lot of sense, I think, in the next 9 to 12 months, because it's just going to be such an uncertain period where you're not going to have this Fed tailwind with potential rate cuts behind you. And so, nobody can predict what the stock market is going to do, I think, in the next, 9 minutes or 9 months or whatever. But I think the next 9 months are likely to be really sort of a make or break sort of environment in terms of where the Fed is going, because the next few inflation prints and the election are going to determine the definitive path into 2025.
All right, and are you in the camp that we'll see houses, autos bring disinflation back to the forefront, or have those other forces the last 3 months been sticky? Just real quick, Colin.
Yeah, I think the disinflation trend is still in place. It's not as, I think, permanent, or the downtrend is not as strong as it was certainly last year. But, the last mile is definitely proving to be the hardest. The Fed's going to get to their 2% target, I think, one way or another at some point, whether it happens in 2024 or 2025.
All right. Good to catch up. Thank you very much, Mr. Rush.
Good seeing you, Oliver.
Likewise.
Oliver.
And disciplined funds. All right. Good macro baseline for us here today as we await data next week to kick back in. Coming up, earnings and a big winner Back to the conversation about veterinarian and animal health. Jeff Simmons, CIO at Elanco, is enjoying a 25% pop in his stock today. We'll talk about the shares once again firming on earnings. Be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on device for free. Schwab Network.
Knock, knock. Number one broker here for the number one.
Come on, Ameritrade. The major issues today. Leading out with 3 white soldiers. God. I can't trade like this. Still moving. I just heard a crash. That better not have been my car. This just really sucks. At this time of day for this thing to start goofing around on me. It's like they do it on purpose just to irritate us retail traders. You know what I'm saying? Come on. I don't like to be delayed. I'm going to get a phone call, I think, soon. Hey, this is Brandon. I told you not to fuck with me. All the ones. Brandon. What's going on here? God. You creep. You're having the same problem with TD? So we got a big long leg doji with 3 white soldiers. I like it because of the, I mean, I was really boasting about it in my mind the other day about how good it got. And then all of a sudden, during Power Hour, and then that guy this morning on CNBC or Schwab here, the retail traders are finally getting it. They don't know how good we are. They're outnumbered. Retail traders mostly are technical traders. No, I haven't here lately. How do we push it, etc.? I forgot how to test it. Etc. 1 control. No. Speed test. Oh. Megabytes per second. I'm at 80. 86, 87. '86, '87. 88. So I'm going to talk YouTube. I'm going to tell you what about this trade here. Why I liked it so much. A long leg doji. I mean a long leg hammer. You know, you got your regular hammers like this. That's a I guess that's a hammer. But then you got this huge long leg hammer. That means the buyers came in here and bought this up real fast. The sellers brought it down. They said, no. It ain't going to be that easy. We're going to come in here and we're going to load up on that big knife, on that big candle. So it bounced off the 200. Now, pay real close attention to what I'm about ready to say. The long leg hammer off the 200, and you got to watch them candles. I went ahead and jumped in the trade because I know pretty much what was going to happen. We came back and we touched that 200 again. And then we had a tweezer bottom off this spinning top. Then we had another hammer. And it led right into 3 white soldiers. So this thing can still move up. But we're getting close to the end of the day now. But that whole, you had a long leg hammer off the 200 with a spinning top to 3 white soldiers out of the trade. Because they'll consolidate. Once them 3 white soldiers pop, you've got to consolidate that first candle. And if you consolidate that first candle, you're still in, it's still bullish. But if it goes below it, you could retrace all the way back down. But this is a very bullish, very bullish. If you ever see that again, you got to have a confirmation. Mine was the 200 SMA. See, well, this was a really good trade for me today. I realized we came down a little too hard, right? And we did nothing but go up. First thing this morning, I said, man, looking at the SPY. I mean, look at the sell-off. Way below yesterday's support. I'm going to do a video on this tonight. I want everybody to watch it. One, two, three, boom, right it open. To double top, out of the trade, you're off to the beach. This was a nice check. Last 3 days, red, green, red. Not good. C minus. Uh-oh. For you or me? Magnificent. Did I get the... Is that your grade? Or my grade? I'm getting scared. So if we're not, if this is what I want you to do. If we're not, let's look at the SPY and the weekly, and let's get a perspective of where we are. I think it was yesterday I said that we had to break this here candle right here, and that we'd find some resistance. This is a weekly time frame. Each one of these bodies represent a resistance level. And this one right here matches up with that one. So I have almost 3 confirmations. I have 2 for sure. That 2 bodies line up together. So I'm telling you, with these 2 bodies right here, at 519.36 on the SPY is a hard resistance. Where am I? Did I do it wrong? Yeah. That's a hard resistance. It's going to be hard to break. We got 1, almost 2, 3 confirmations. So the next support is the body of this candle right here. And that's where we got to keep. That's at 515 something. You got a couple wicks in here. Then you got the bottom of the week right there. And that matches up with that, and that. So you have 4 different connections right there. I got 4 lines. I'm going to pull it up on the 20-day 1 hour, 4 hour, and 20-day 1 hour, or then, yeah, 90-day 1 hour. We got a head and shoulders. Head and shoulders. You got left shoulder, right shoulder. We got head and shoulders. I'm going to turn that into a different color. Price line 5. Now, 5 day, 30 minute. I think we're going to come down to the 200. I think we're going to come down to 513 this week. Today's Wednesday. Yeah. Unless Hamas didn't have a peace treaty. Israel's still going into whatever that place is, Hodis or Houthis. Biden's not helping. These riots aren't helping anything. I can't believe these college kids are being so damn stupid. They're just advertising it, making it worse. You can't have peace unless you act peaceful. Yeah, I'm not going to be very bullish. I'd like to see this 200 SMA and then really become very bullish. 513. I'm going to stick to the story. So I don't want everybody to get too... I mean, I can read these charts like this, that, and I want you to be a little bit more relaxed in your trading until we have a little pullback. And I could be wrong, but I really like this 200 right here. I'm not going to play no put. I don't know. 517 at 127 for Friday put or call, Randy? Is that the 10th? Oh yeah, look at them 517s at 36,000. Five of them. We got 8 more minutes, so I'm going to wait until tomorrow. They do look good, though. Used to call me baby, now you don't call it on. No, I'm not going to take no swing overnight. I'm just hearing all kinds of bad news, kind of like all of a sudden. You know, they pumped up Uber and then they say it ain't no good. And then they pump up, they said Lyft was no good and they're pumping Lyft. I don't know what they're doing. So I don't think I want to take the risk, come in here and, unless I'm buying a put, but then I just think we're at a solid resistance right now and we need to, I've been saying we need to go sideways for the last month and a half. And we still need to probably go sideways for a couple more months. We got the summer months coming up. People have made a ton of money. More than they've ever made in their whole career in the past year. So I'm having a feeling people are going to take some time off. It's been one of the most glorious year and a half that I've ever seen. If all you had to do is play them top tech and the SPY and the SPX and ugh. I just have a feeling there's going to be a lot of people taking a little bit of time off this year. I want to trade ARM. I do. Oh, gosh, glad I didn't trade ARM. People are counting on a pop on AMC. Zach Room's talking about it, and there's probably other rooms talking about it. It's held my support level all week, so that's a good sign. I think they're going to trap it higher too. I don't want to take too much of a chance at these resistance levels when I'm, felt irrational exuberance for the last 4 or 5 months. Ever since the beginning of the year. Make sure we watch my video tonight on the SPX, and I really want to talk about this gap down, how to trade them. That was frothy. See, that's different than something like this that's had bad earnings. It's different than Uber, which been pumped real hard and people are, what? How could this, how could it not have profit? There's a lot of people stuck in this stock, I guarantee it. Because of the way it's been pumped. Uber surprises with a 15% revenue jump and a sharp 8% stock drop as a slash year to date's gains. I don't hardly eat out it anymore like I used to. Securities cuts Uber Technologies price to 86 from 94, maintains buy rating because they're stuck in it. One more minute. So I got one trader today. It's kind of the way I was walking through the SPX at the bottom. Kind of maybe put a little bit of fear in your mind. It's hard for me to keep my emotions. You know, you gotta know how the trader feels. And I wasn't feeling I was stuck and I didn't want to sell it. I just couldn't sell it because I figured, man, this thing's going to pop. Because the setup was there. SPX, when you trade the SPX, you plan on making a lot more money with it or losing a lot more. You trade the SPY, you won't get hurt as bad. That's one good point to bring. We had a nice little 1, 2, 3 bounce on this, and we hit a 20-day resistance. We hit a 20-day resistance with a lower high, which makes it a little bit bearish. So I truly think we can come down and hit this 200 again and respect that, or stop at the gap right there in front of the 63. We've had a nice, like yesterday I talked about the 5-day rule and the 3-day rule. But 1, 2, 3, well, I guess I can count that. 1, 2, 3, 4, 5. 1, 2, 3. Back down to this here channel above this resistance level. So that's what I'd be looking for. And that's a pivot point. Would be a very strong buy if we got down above this 200 where we bounced off of it. No disrespect. We could hold this previous high instead of the double top. And that'd be a higher low, and that'd bring it up, catapult a triple top breakout on a 20-day time period. Here's your head and shoulders. So I can easily stop back down to a double bottom and bounce and continue back up. If the 9 crosses down over the 21, then we're for sure to see the 200. So I'm going to get out of here and relax. That was a tough day. But again, I end up green because I stuck with my plan. It's not always going to work out, but I'm telling you, through experience of 20 years, that if I'd have held every stock I had sold, I would probably be doing very well, or better. I would have probably had a lot less losses by the end of the day. If that means anything. But it's not always going to be like that. I mean, it could be that one time where you decide to hold it and you lose a big buck. So I always suggest to create a stop loss, have a plan, have a support level, manage your portfolio, get out. If the trades ain't working, just get out of them because it's not working, and it's not good to hope. Not when you're at an irrational exuberance, 5 or 6, 7, 800% run in a lot of stocks in a year and a half. It's just I've never seen it. It took Obama 8 years to get it back, and then we broke. I mean, it took him good 2 to 3 years before the market decided to go ahead and run. It didn't take no time because they printed so much liquidity. We're $2 trillion over the budget, plus that's $8 trillion, plus another $7 trillion. So that's $15 trillion pumped in the market, not counting unfunded liabilities that we're responsible for, that are in the tens of trillions in the past 3 years, 4 years. I've never, it's just a lot of money being printed that could bankrupt our country or get us in a war. Wars are all about money and religion. That's it. So we're at a 20-day resistance. I'm going to go through my watch list probably tonight, and I'm going to say resistance too much. I'm going to say cheap. I'm going to say resistance too much, cheap. And those are the stocks that you're going to have to watch. And those are the stocks that I'll note. Too expensive, wait for the pullback. Too cheap, I think we're going to break out. In fact, shop, real bad earnings. I want to put the 3-day rule on this, that or if we break out of some kind of resistance level, which would be the 9, I'll take the trade. But right now I can't. Real bad, real bad. They got a buy rating on this sucker. Catch price target to $80. These people are stuck in these stocks. Now, look at the 3-year. See, this ain't that cheap. I mean, this is cheap. It hit the 200 on the 3-year, so that was an exit idea with a head and shoulders, left shoulder and right shoulder. So this thing can come down and find a yin-yang right here, right around, wow, another $20, another $15, maybe right here, 53 something. Perfect. Perfect. 53.48. I'm going to send this to my friend that wanted to get in the trade, and I'm going to say 53.48. That's just one line. That's all I needed. That's all I need to know. We broke the 63 and the 50, so it can easily find this pivot point. We hit the resistance level of the 200 SMA. That was an exit idea. That's shop. GME, money maker this week. It's getting pumped by the rooms. Again, was another beautiful trade on this thing right in the morning with an inverse head and shoulders up to a double top, out of the trade, off to the beach. It didn't take much. Didn't take too long to make money on this here shoulder line. What? A big frickin' hammer. Right off the shoulder. There's your head, your left shoulder, right shoulder, right shoulder. I always say the second right shoulder is where you want to take the trade maybe. Hammer was the ideal entry for that trade. Big long leg hammer to a double top. Tesla on the 20-day. Now again, the DOJ is on to them. We hit the 200 SMA, which is a pivot point. We can drop back down, find the shoulder line of this head and shoulders, and set an alert. We had a good run. We already earned up $50. in 5 or 6 days. I mean, that's big. That's big. And I would have probably shorted that with this doji. To the 200 SMA. I said 200 SMA all the time because it's a pivot point. Resistance, 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 consolidation, breakout, pullback. That acts like a pivot point. That's all that does. On any time frame, I find it very useful. So back down to the shoulder line, which is right there to right there or right there, one or the other. And back down to 150. But I don't know. I think it'll stop here. Lulu, 20-day. We're pulled back for a couple weeks. We busted support. We got an inverse head and shoulders right here. Right around 340. One line. That's all I need. And Baba being pumped. 200 SMA on a triple top breakout gap fill. Right off the 200 SMA, I got a double confirmation of a triple top break, pulled back to the 200 SMA. Google, being pumped by the fat cats, had great earnings. Put a Fibonacci on this one here. 50% pullback off the 200 SMA. The alert set. Already have the alert set. Right where I think it's going to go to. Mira had a pop today. We hit the 1, 2, 3 and broke down. It kind of broke back up. I can see this thing pulling back to the 200 SMA. Right here to double bottom. So I'll put my alert above the 200. We got LLY. Bounce up. Yin Yang. Off the 200. Double top. Pull back to this here previous resistance. Set alert. Cup and handle. NVIDIA. CNBC was pumping this up to 1100. I want to short it to the 200 and then maybe take the trade. I got an alert set for the previous high of a 1, 2, 3 breakout. Next, Morgan Stanley. Another pump by what's her name on CNBC. And she got her wish. It did break out. So I don't know. I'm not happy with it. I think it sucks. The bank. This one looks pretty decent. I'd like to see it pull back to 433.17. A $6 dip. Take it off the 200 off this previous high and these previous lows. It's a pivot point on the chart on the 190 day, 1 hour. SPX, I want this thing to drop. AMC, is getting pumped. Not too many people are liking the news, are they? AMC Entertainment, when's earnings? Definitely getting ready. Spy. We're dropping on down. We got a head and shoulders here tomorrow. We might see another bottom. So that's it. I'm gonna rest. I'm really pooped out. I want to say thank you to everybody. I'm trading only one trade at a time. I'm going to keep doing it until we find some dips. This market's way overbought, in my opinion. And there's so many expansion patterns and knives coming into the scene. A lot of people are kind of fearful right now. I was in some other rooms. I mean, rookies. I'm not taking that. Then I turn around and take it, and it runs up to a double top. I see things because I study chart patterns, moving averages, and being in the now. And I really enjoyed trading a 2-minute today. I can still see my patterns. And I don't think I would have saw that big old, let me see here. I'm going to put a dot off the 200 here. And take it to the 1 minute. Here, we'll just do this. So this is right under the top of that box. Now we're going to do this to 1 minute. Yeah, 1 minute would have done it too. Yep, the 1 minute would have got me in the trade too. It's just a little bit different. Lower lows would freak me out, but it had an expansion pattern leading out from it. So I would have said, yeah! On the 1 minute. See, I wouldn't have seen that expansion pattern on the 2 minute, I don't think. People are just very fearful of trading the 2 minute, the 1 minute. I don't know why, but so I'm going to trick it back to the 2 minute. About the same kind of thing. Same. I think I'd done that. Okay. Later dates, retail traders.